Hi everyone, in today's class we are going to cover all the MCQs of your strategic cost management subject from your previous attempts starting from June 2017 to December 25. Whatever MCQ has been asked by the institute, we are going to cover that on a chapter-wise basis, and these MCQ session is going to be on 100% English language. So let's start with our first chapter, that is Introduction to Strategic Cost Management. Which one of the following simply answers the question, what else will accomplish the purpose of product, service or process we are studying? When we are saying here what else, what does what else means? We want to find out something else to fulfill our requirement or to fulfill the function which we are providing for the product or services which we are providing to the customer, but that should be at lower cost, should be better at quality, should provide greater efficiency. That is what we are finding out. So let's assume that we are making a calculator. For making calculator, we can either use plastic or I'm thinking of using aluminium in place of plastic. So there are two different materials. I'm going to evaluate those materials. Whatever is of lower cost, providing better quality and greater efficiency, that is the one which we are going to prefer. Now tell me where we do this. Where we find out this what else? In value engineering, value analysis, business process reengineering or supply chain strategy. So this finding out what else mostly happens when you are designing the product. So whenever I'm designing my own calculator which I'm going to sell to the customers, at that time I'm going to decide what is the material I should use, right? And that is why this happens at value engineering. Value engineering is the thing which is applied at the design stage of the product, and at that time we try to find out different types of things which can fulfill our function but keep our cost lower, quality higher, efficiency higher. Okay? This can also be done under value analysis. What is value analysis? Rather than working on the product at the start, if I'm working on the product after making the product, I have already made this calculator. Now I'm deciding that how can I reduce the cost, improve the quality, improve the efficiency of the product by changing some of the things which are there in this product. Okay? So this is what value analysis is. But mostly in value engineering, we perform this design kind of thing. Hence, the correct answer here is value engineering. What is business process reengineering? When you are completely changing your processes to improve your business, to make a radical change in your business, that is what business process reengineering is all about. Supply chain strategy, that means a strategy which is applied for our supply chain. What is supply chain? Starting from the supplier, taking the raw material from the supplier and providing it to the customer. This is the whole supply chain, and if I'm making some strategy related to it, then that is supply chain strategy. Which of the following is not a principle of business process reengineering? So when you're making a radical shift in your business, you're going to follow some principles. The first principle says that organize work around outcome, not task. Capture information once and at the source. Empower worker who use the process. Rely heavily on hierarchy and supervision. What do you think that out of these principles, what is not a principle of business process reengineering? So whenever we are reengineering, we are trying to remove all the traditional things which are limiting our power, limiting our performance. So if you notice, this hierarchy and supervision is a traditional thing which is limiting our performance. Hence, this is not a principle of business process reengineering. Others like focusing on outcome rather than task, this is actually done in business process reengineering. We capture information once and use it whenever we require. We are not going to capture the information again and again. Empower worker who use the process. So rather than processes being designed by the top managers directly, if you involve those workers who are actually performing the processes, that will actually empower the workers also. Okay? So rely heavily on hierarchy and supervision is not the principle of BPR. Which of the following primary activities of Potter's value chain deliver the product or service to the customer? To deliver the product or service to the customer, what you are going to do? You are going to perform the operation, outbound logistic, infrastructure or services. We are going to perform outbound logistic. What does outbound logistic means? When you are taking your product from your factory to the customer, that is what outbound logistic is all about. What is inbound logistic? When you are taking the raw material from the supplier to your factory, that is inbound logistic, where you are taking something inside your organization. But when you take your final product from the organization to outside to the customer, that is taking outside, hence outbound logistic. Okay? Out of all of these, if you remember, this Potter's value chain is divided into two parts. First one is primary activities and second one is secondary activities. So tell me, out of all of these, what are primary activities and what are secondary activities? So operations, outbound logistic and services, all of these are primary activities with the help of which we provide the product to the customer. Operation is producing the product, outbound is distributing the product, services is after sale service. Then infrastructure is our secondary activity. Which of the following important pillars of strategic cost management determine the company's comparative position in the industry in terms of performance? So what is the important pillar which are going to focus on comparative position in the industry in terms of performance? It is going to be cost driver, value chain, strategic positioning or competitive value analysis. So let me tell you one thing. In the strategic cost management, we have only 3 important pillars available. And out of all the 4 given, this is not the pillar at all. So the pillars are only cost driver, value chain and strategic positioning. What do you think that what will focus on comparative position in the industry? Comparative position, where we are seeing how we are performing as compared to that of our competitors, and that happens in strategic positioning analysis, where we are seeing that where we are positioned as compared to our competitors. What is value chain analysis, where you are finding out what is the value adding activities and non-value adding activities, removing those non-value adding activities and keeping those value adding activities. Next is cost driver analysis. As you use cost drivers in activity based costing, similar to that is what we do in cost driver analysis. We find out what is the reason of cost, why the cost is incurring, why the cost is increasing, or the cost drivers are used at a higher number of rate as compared to that of what it should be used. We can do all of those analysis here. Okay. Which one of the following is true for blue ocean strategy? What is blue ocean? Creating your own ocean rather than competing with the already existing market. You are creating your own market by yourself. That is blue ocean strategy. Okay? So tell me one thing, when you're creating your own market, are you going to beat the competition? Answer is no. There is no as such competition available. So whom you will beat? Whom you will perform higher or perform better than other competitors? There are no as such competitors available. So this is not what happens in blue ocean strategy. Exploit existing demand. You're creating your own new market. Hence, new demand is there. So no need of exploiting the existing demand. Make the competition irrelevant. Now this is something going to happen when in blue ocean strategy. We make the competition completely irrelevant because we are creating our own new market where there is no as such competition available. Make the value cost trade-off. Value cost trade-off happens when there is a competition. In that case, if you are providing higher value, you will increase the cost. Your cost will get increased, but you will not be able to increase the cost because the market is competitive. So even if you are increasing the value, you have to keep the cost lower. So you have to make a cost value trade-off so that the cost is also lower and the value is somewhat also good. That happens when you are having a lot of competition. So the competition happens in red ocean strategy. So all these 3 points are going to be applicable in red ocean strategy. Okay? Which one of the following important pillars of strategic cost management determines the company's competitive position? So this though has been asked previously also. Hence, strategic positioning analysis is the correct answer. Which one of the following is not a support activity? See, this value chain, I already told you that there are 2 different types of activities in value chain. The first one is primary activity and second one is secondary activity, also known as support activity. Secondary activity can also be known as support activity. So tell me which one is not a support activity here? Human resource, technological development, service or infrastructure? So service is primary activity. After sales service providing to the customer is a primary activity, but others are support activities. Hence, this is not a support activity here. Which one of the following is not true for a red ocean strategy? Red ocean strategy means you have a huge amount of competition and in that you are working. So what is not a feature of your red ocean strategy? Beat the competition. We beat the competition because we have a lot of competition. So we have to beat the competition, then only we can perform better. Next, exploit existing demand. This also happens in red ocean strategy because the existing demand is already there. We are competing for that existing demand only. Hence, we have to exploit that. make the value cost trade-off or break the value cost trade-off. In red ocean, we make the value cost trade-off because I can't increase the cost if I'm increasing the value also, because there is a lot of competition. So we have to balance value and cost here in red ocean. But break the value cost trade-off. Now this breaking the value cost trade-off, this doesn't happen in red ocean. This happens in blue ocean strategy when you don't have any competition. Activities required to design, develop, produce, market, distribute and service a product are known as target activities, value chain activities, whole life activities, overhead. If you notice, all the activities which are provided here or performed here are the activities which are adding value to our products, hence value chain activities. Stock control data for material P. Now this question is of EOQ, that is economic order quantity, which we don't study in your CMA final. But in June 2017, they have asked you this EOQ related question, which we study in CMA Inter itself. So let me tell you what is EOQ. Economic order quantity, that means the quantity which you should order every time so that your cost is lower. Now how to find this out? For this we use under root of 2A. A is your annual demand or the annual usage of material which you are using. O is your ordering cost per order. For ordering in every order, what is the cost you are incurring is ordering cost. And divided by C. C is your carrying cost of 1 unit for 1 year. What is the carrying cost? That is what we consider here. Okay? So 2 into annual usage or annual consumption which you are having of the raw material, and that is 3600, multiplied by ordering cost per order, which is 40 rupees, divided by carrying cost. Carrying cost is stock holding cost or storage cost of the stock, and that is 20% of the overall stock value. So whenever we are taking this 20%, whenever they are providing us the percentage, we charge it on the cost per unit. So 20% of 100 rupees. Now this is going to be the cost of holding the stock for 1 year. So 2 into 3600 into 40 divided by 20 ka under root is equal to 120. So 120 units is what you should order every time to keep your cost lower. So option number D is the correct answer. And with this, we completed our first chapter. Now we are moving forward to the second chapter, that is quality cost management. Which of the following is or are not the quality parameters for manufacturing organization? So manufacturing organization is making products. For product, what all are not the features is what you need to tell here. Reliability, durability, serviceability, courtesy or friendliness. So reliability, that means your product should be reliable. We should, as a customer, should get we can rely on that product. That is the quality of the product which you should have. Like this calculator, I already know that whenever I'm going to switch on this calculator, this is going to work. That is what reliability is all about. Durability means how much specific period of time this can work. As much as longer the product is able to work, that shows higher amount of quality in that product. Serviceability, that means if the product gets damaged or is not working, we can do a service of the same and that can be corrected easily. That is serviceability. Now all of these are there in the product, but courtesy or friendliness is not applicable to the product specifically. Hence this is not a feature for your manufacturing organization. You can also see this feature so that if the question is changed somewhat, you can handle that also. So manufacturing organization has conformance to specification. Whatever standards we have set for the products, we are able to fulfill that. We are able to provide a good performance for the product. It is reliable. It is having features which is required by the customers. It is durable, going to work for a longer period of time, and it is serviceable. If the product gets damaged or is not working, we can easily do a maintenance or do a repair of the same so that it can start working again. Next, service organizations have some tangible factors, like if I'm providing you the classes, with the classes I also provide you the books. That books is the tangible factor of my services as classes. So classes are my services. With that I'm providing something tangible. That tangible factor is also going to be a factor with the help of which you are going to judge how my services are. Okay? Next, consistency. Your services, in services it is very important to be consistent. Like my classes should be every day good enough for you to see. If some classes are not good, some are good, you'll not like that, right? Every time the class should have an exact amount of consistency, exact amount of energy every time. Okay? Responsiveness to customers' need. Whatever customer want, you need to respond according to that. Courtesy and friendliness should be there. Timeliness and promptness. As fast you are able to provide the service, that is how you win the customers. And atmosphere for the environment for the services is also important. Like if you go to a restaurant, if the atmosphere or the environment is not good, you are not going to have a lunch or dinner there, right? So these are the features of quality under service organizations. Which of the following quality cost is incurred when inferior products are delivered to the customer? Now there are 4 different types of quality cost which can be incurred. The first one is prevention cost, where you are making sure that defectives don't arise itself. So for preventing the defects, whatever you do, that is your prevention cost. What is appraisal cost? Now after making the product, you are checking your products whether they are defective or not. So whatever inspection related work you do, that is your appraisal cost. Then comes internal failure cost, when after inspecting. So in this appraisal, we are going to inspect the things whether my final product which I have made is of good quality or not. After inspecting, let's assume that some defectives are found out inside the organization itself. So we are going to correct that. We are going to correct those defectives. So those correcting those defectives or scrapping those defectives, whatever is the cost of the same, that will be considered as internal failure cost. And the last one is external failure cost, when the defective product has reached to the customer. This is the worst kind of quality defect which can arise in the organization, that your defective product has reached to the customer. If that happens, then your reputation is going to get damaged. Now, out of all of these, the question says the product is delivered to the customer. Whenever the defect arises after product is delivered to the customer, that is external failure cost. Now, let's move forward to the next one. Which one of the following quality cost is incurred in the process of uncovering defects? That means finding out defects. Where we do this finding out of defects? We do that in appraisal cost, where we are inspecting the product, then only we are going to find out the defects. Okay? Downtime due to defect in quality is an example of downtime due to defect in quality. Downtime means your machines are stopped for a particular period of time due to quality defects. This is an example of which type of quality cost? Internal failure, because the failure has arisen inside the organization itself. Okay? Warranty period, return of finished goods sold falls under the following quality cost. If the product has already reached to the customer and now you are getting a return of the same, even if it is happening on the warranty period or not, it doesn't matter, it is an external failure of your product. Depreciation of product testing equipment. So product testing happens in appraisal part. So if product testing equipment has a depreciation cost, that is also going to be charged as an appraisal cost. Even if it is a depreciation, doesn't matter, you're going to charge it as an appraisal cost. We are not discussing about cost is relevant or not. So there is no as such point that it is an irrelevant cost. I understand that when we study relevant costing, we don't consider depreciation as relevant. But here we are not studying relevant costing, right? We are studying about quality cost. Hence, appraisal, this depreciation of product testing equipment is a part of appraisal cost. A factory is setting up a special inspection at the supply point of raw material at 80,000. So we are going to inspect, and the cost of inspecting is going to be 80,000. So this is the appraisal cost which we are incurring. Consequent to this, there is lesser number of returns from the customer. This goods used to be sold for 1 lakh rupees and variable cost of 80,000. The change in quality cost are. Now in this question, the question has not given us the clarity that lesser number of returns means what? The customer was returning the product and not exchanging it with another one, or he was exchanging. There is no as such clarity about it. So what we do is, we take this variable cost. Think about a product like the calculator. If I am selling this calculator to you, but as this calculator was defective, you return that calculator to me again. Now as it is a defective product, not usable for me also, I have already incurred all the variable cost in this product. Hence that variable cost is the loss which I am having if you are returning that product back to me. Okay? So this variable cost of 80,000 rupees is a complete loss for you if the product is of no use, if it is a defective product. Hence, Due to this appraisal cost of 80,000, we are able to reduce the returns. Hence, we are able to save this variable cost of 80,000. So we incurred 80,000, we are able to save 80,000, hence there is no asset change in the quality cost. Okay? Liability claims is an example of. Liability claims means the defective product has reached to the customer. Now the customer is asking us the claims for the same. It can happen and that the product has led to some losses to the customer, and if some losses has happened to the customer, they are going to ask the liability claims from you. And this is a type of external failure cost only. When the customer has received a defective product, then only he is going to ask for a liability claim. Hence, it is an external failure cost. X Limited has 1000 units of an obsolete item which are carried in inventory at an original price of 50,000. So we have 1000 units, obsolete item, that means that is of no use to us. Hence, this 50,000 originally incurred cost is completely irrelevant. Now, let me tell you one thing. This is a question of relevant costing only. That is your chapter number 3. Mistakenly, it has been added here. Okay. But let's see what is happening here. So, 1000 units is there in your inventory at the original price of 50,000. 50,000 original price is completely irrelevant. Next, if these items are reworked, 20,000 has to be incurred, but by reworking, we will be able to sell this at 36,000. So 36,000 is what you're getting by incurring 20,000. Hence, you are able to earn 16,000 extra if you are reworking on the product. Alternatively, they can be sold at 6,000 in the market. Either you can do reworking on the product and sell it at 16,000, or else you can scrap that product directly at 6,000 rupees. In a decision model used to analyze the reworking proposal, so if I'm analyzing this reworking proposal, what should be the opportunity cost? What is opportunity cost? The next best alternative which you foregone, which you are leaving to choose this particular alternative, that is your opportunity cost. So by choosing reworking, we are leaving this selling the product as scrap. Hence this particular 6,000 rupees becomes our opportunity cost here. Okay? Next question is the match the column. So Dr. Deming believes. So let me show you what is written in your study mat. For Dr. Deming, they are providing us that he has provided the plan, do, check, act cycle with the help of which we are able to predict and provide a defect-free performance for our products. Okay? So can I say that Dr. Deming believes on preventing the defect? We can say that. No? Next, Ishikawa development. Ishikawa has developed that fishbone diagram which focuses on cause and effect. So it is also called as cause and effect diagram. Type of variation is due to. Type of variations can be due to two different reasons. First one is common causes and second one is special causes. So here they are providing us the common causes. Crosby's objective of quality. Now this is the only left one and this is the only left particular point. But let me tell you, this Crosby's objective of quality was quality should be free. That quality is free from all the defects. So he is also focusing on preventing the defects. He is not focusing on the histogram specifically. So he also focuses on this particular point. But can I do this kind of selection in our match the column? Answer is no. You have to select 1 point for one of them. So this Crosby's objective should be selected with preventing defect because he was not related with histogram. Histogram is specifically used in statistics, and statistics, Dr. Deming was using statistics more. Hence, for Dr. Deming, you should select this one. I understand that Dr. Deming was believing on preventing the defect also, but his main, as the point, as we have to select 1 point for Crosby and 1 for Dr. Deming, we have to select for Dr. Deming histogram and Crosby for preventing the defects. Okay? So, for A, we are selecting 4, then 3, then 1, 2. 4, 3, 1, 2. Option number D is the correct answer. Now, let me tell you, in the exams, they have asked this question in December 2017, and at that time, they have ticked this histogram for Crosby's objective of quality. But that is not correct. Your Dr. Deming should be selected for histogram and Crosby should be selected for preventing the defect. Hence, we have ticked the correct answer here. Okay? Chalo. Moving forward to our next chapter, and that is chapter number 3. Huge chapter and around 3 MCQs are asked specifically from this chapter only. So this becomes an important chapter also for you. Question number 1. RIM Limited has estimated the demand level of its product. Sales units are there and the probability of these units are given to you. So this is a question of decision making under probability. It has an estimated contribution of 4 per unit and total fixed cost of 60,000. What is the probability that the company will make a profit of at least 15,000? So to earn a profit of at least 50,000, first we need to find out what is the number of units which we need to sell. For that, we are going to use a target profit formula for finding out the units. You need to take fixed cost plus target profit, whatever you want to earn, divided by contribution per unit. Fixed cost is 60,000 plus 15,000 of profit divided by contribution of 4 rupees. So 75,000 divided by 4 is equal to 18,750 units. That means at least 18,750 units should be sold so that you can earn a profit of 15,000 rupees. But we need to find out the probability of the same. So if the units are 18,750 or higher than that, then only you are going to earn a profit of 15,000 at least. So you have to take the probability of units equal to or more than 18,750. And that too we have this 20,000 only. Hence, we are going to take the probability as 30%. Next, SM Limited, a manufacturing company, produces a product which is sold at a price of 80 per unit. So this is our selling price. Its break-even sales is 15 lakh. Fixed cost is 6 lakh rupees. What will be the desired quantity of sales to earn a profit of 4 lakh rupees? So, for earning a profit of 4 lakh rupees, what is the units which you should sell? So again, I am going to use this formula of units to earn a target profit. Fixed cost plus target profit upon contribution per unit. I already know my fixed cost as 6 lakh and the target profit of 4 lakh. But we don't have this contribution per unit. So for calculating this contribution per unit, I am going to use this break-even point sales formula. What is the formula for break-even point sales? Fixed cost upon PV ratio. What is fixed cost? 6 lakh rupees, and break-even point sales is already available with us of 15 lakh. So with the help of this, we can calculate PV ratio. PV ratio is equal to fixed cost upon break-even point sales. So 6 lakh divided by 15 lakh is equal to 40%. 40% is PV ratio. We want contribution per unit. How to calculate contribution per unit? You already know selling price per unit. Just multiply this with 40% of PV ratio. This will give you 32 rupees as contribution. So 10 lakh, 6 plus 4 is 10 lakh, divided by 32 is equal to 31,250 units. And this is your answer. Okay. Next, Boss Limited, a manufacturing company, requires 90 lakh in sales to meet a target profit of 15 lakh. So to earn a profit of 15 lakh, we have to do a sales of 90 lakhs. We already know that whenever we have contribution or whenever we are doing cost volume profit analysis, we are going to take sales minus your variable cost will give you contribution minus fixed cost will give you profit. Next, the question says that the contribution margin is 30%. What does contribution margin of 30% denotes? That out of the sales of 90 lakh, 30% is going to be your contribution. So 90 lakh into 30% is 27 lakhs. So if 27 lakhs is my contribution and 15 lakhs is my profit, then what is going to be the fixed cost? 27 minus 15. 12 lakh is your fixed cost here. And that is what is asked in the question. Option number B is the correct answer. Now, moving forward to the next part. The shadow price of skilled labor for SD Limited is currently 10 per hour. Now, what does it mean? What is shadow price? So, whenever we have some limiting factor, like in this case, we have the limiting factor of skilled laborers, we calculate that if we get 1 extra hours of skilled labor, what is the extra contribution we can earn? That is what our shadow price shows. So if you have a shadow price of rupees 10 per hour, this denotes that if you have 1 extra labor hour, you're going to earn 10 rupees extra as contribution. So the contribution will be increased by 10 per hour for every extra hour of skilled labor that can be obtained. Okay? Now, moving forward to the next point. The product of XYZ company is sold at a fixed price of 1500. So 1500 is our selling price. As per company's estimate, 500 units of the product are expected to be sold in the coming year. We are going to sell total 500 units. If the value of investment of the company is 15 lakhs, 15 lakh is the total amount which we are investing and we want a return of 15%. So this return of 15% on 15 lakh is our profit which we want to earn from our products. Okay? So 15 lakh into 15% is 2,25,000 is the total profit which we want to earn from 500 units. So for every unit, what is the profit you want to earn? We want to earn 450 rupees on every unit. And now the question wants you to calculate the target cost. So if this is the selling price and this is the profit, the difference between them is the cost. And that is how we calculate the target cost, by taking our selling price and reducing our profit from it. So 1500 minus 450 is 1050. Hence option number C is the correct answer. Okay. Next, the break-even point of a manufacturing company is 1,60,000. Fixed cost is 48,000. Variable cost is 12 rupees per unit. You have to calculate PV ratio. We already know how to calculate PV ratio with the help of break-even point sales. What is the formula of break-even point sales? Fixed cost upon PV ratio. The question has already provided us the break-even point sales and the fixed cost. So with the help of this, we can calculate the PV ratio. Okay? So 48,000 divided by 1,60,000 will give you PV ratio of 30%. And we are done with this also. Moving forward to the next one. A factory of Mons Limited can make only one of the three products A, B or C. So out of these three products, only one can be produced in given production period. The following information are given to you. Selling price and variable cost is there. With the help of this, we can calculate the contribution, which is 1,000, 900 and 800. Assume there is no constraint on resource utilization. There is no as such constraint available on resource utilization and on demand also. There is no constraint on the demand. And similar resources are consumed by A, B and C. So what is the opportunity cost of making 1 unit of C? So if you already know that there is no resource constraint or demand constraint, you can decide on the basis of contribution per unit or the total contribution which you are earning from that product. As there is no as such demand related constraint also, I can decide on contribution per unit only, that what product I should produce. So as the contribution per unit is higher for product C, we decided that we are going to produce product C. But if you are producing product C, what is the opportunity cost? Opportunity cost is next best alternative, which is foregone. So out of the remaining two, what is the next best alternative? Next best alternative is B of 900. Hence 900 is your opportunity cost of making C. Okay. Now, Sont Limited has fixed cost of 5 lakh and variable cost of 70% of the selling price. To realize profit of 1 lakh rupees from sales of 4 lakh units, the selling price per unit must be, so I already know what is the profit here, which is 1 lakh. So sales minus variable cost gives you contribution minus fixed cost will give you profit. I already know the fixed cost of 5 lakh rupees. If I want to calculate contribution, you can add fixed cost with the profit to get your contribution of 6 lakh rupees. Now the question says variable cost is 70% of selling price. Let me tell you, this selling price is divided into two parts. First is variable cost and second part is contribution. So if out of 100, 70% is variable cost, 30% is contribution. I already know that 6 lakh is 30%. Then what will be the value for 100%? 6 lakh divided by 30 into 100. That is equal to 20 lakhs. Now this is the sales for 4 lakh units together. I want to know the selling price on per unit basis. So 20 lakh divided by 4, that is equal to 5 rupees per unit is the selling price here. Okay. Next, Rotees Limited, a manufacturing company, has break-even point when sales are 12 lakh and fixed cost at that level of sales is 4,80,000. If the margin of safety and the sales of the company are, margin of safety is 40%, sales of the company is 5 lakh units. Respectively, what will be the selling price per unit? Now, this is an interesting question. For calculating selling price, what I am going to do is, I am using my break-even point and margin of safety. So break-even point sales and margin of safety sales together gives you the actual sales which you are having. What is margin of safety? Margin of safety is over and above your break-even point. Break-even point is zero profit, zero loss situation. So over and above your break-even point, whatever extra sales you are doing, that is margin of safety. Okay? So if I add this at this break-even point sales, if I add my margin of safety, I can know what is the actual sales which I am having. I already know that this margin of safety denotes 40% of our sales. If the question is not saying anything with the margin of safety percentage, they are only mentioning you 40%. That means they are telling you that percentage on the basis of sales. Okay? If it is on the basis of BEP, they will specifically mention that. If they are not mentioning anything, that is on the basis of sales only. Okay? So if your sales is 100%, 40% of that is margin of safety. That means the remaining 60% is going to be your break-even point sales. I already know my break-even point sales as 12 lakh rupees. So 12 lakh rupees is my break-even point sales, which denotes 60. I want to know the total sales, which is denoted by 100. So 12 lakh divided by 60 into 100 will give you 20 lakh as the total sales. But we have to calculate selling price per unit. So divide this total sales with the number of units, which is 5 lakh, and this will give you a selling price of 4 rupees per unit. Okay. Next, 120 units of semiconductors are required to be sold to earn a profit of 1 lakh in a monopoly market. The fixed cost for the period is 80,000. The contribution in the monopoly market is as high as 3/4 of its variable cost. Determine the target selling price per unit. Now, first though, I already know what is the profit I am earning. And I already know what is the fixed cost here, that is 80,000. So if I add my fixed cost with the profit, I can know what is the contribution, which is 1,80,000. Now the question says that the contribution which we are earning is 3/4 of variable cost. Okay? Mostly the ratio of your contribution is given on the basis of sales, but now they are providing on the basis of variable cost. So let's say my variable cost is 1 rupees, then 3/4 of it, 1 into 3 by 4 will give you 0.7. 0.7 rupees is your contribution here. Okay? So I already know that the sales is the total of variable cost and contribution. So if your variable cost is 1, contribution is 0.75, that means sales is going to be 1.75. Can I calculate sales with the help of contribution already available with us? I already know that the contribution is 1,80,000, which is denoting 0.75 here. And I want to calculate this total, which is 1.75. So 1,80,000 divided by 0.75 into 1.75 is equal to 4,20,000. This is the total sales which you are having. For total 120 units, we want to know the selling price for every unit, and that is going to be 3,500. Okay? Done. The break-even sales of GXT, a manufacturing company, is 3,75,000. Fixed cost is 1,12,500. Margin of safety is 40%. Then what is the profit? So, to calculate the profit, we can use the formula of margin of safety is equal to profit upon PV ratio. But for using the formula, I should know what is the margin of safety. I should know what is the PV ratio. I don't know any of it as of now. So for calculating PV ratio, we already know that fixed cost upon break-even point sales will give you PV ratio. Because break-even point sales is equal to fixed cost upon PV ratio. So what I have done is, I have taken this PV ratio here and break-even point here. We can do that by cross multiplication. So with this, we are getting our PV ratio as fixed cost is 1,12,500 divided by BP sales is 3,75,000. 1,12,500 divided by 3,75,000 is 30% is your PV ratio. Now I have to calculate margin of safety. This is also easy. We already know that break-even point sales plus margin of safety sales is equal to actual sales. I know that my margin of safety is 40%. My sales is going to be total, that is 100%. That means break-even point is 60%. I already know the break-even point sales value, which is 3,75,000. Now this 3,75,000 denotes my break-even point sales, which is 60%. I want to know my margin of safety sales for calculating profit. Hence, I'm going to multiply this with 40%. So if 3,75,000 is 60, then what is going to be the 40%? 375 divided by 60 into 40 will give you 2,50,000. So 2,50,000 is my margin of safety is equal to profit upon PV ratio is 30%. So if I multiply this 2,50,000 with 30%, I can know my profit, which is 75,000. Done. Moving forward to the next question. Bent Limited, a manufacturer of components for VCD company, has a capacity to produce 4 lakh units. Total 4 lakh units is what we can produce. The market demand is sensitive to the sales price, and the company could sell 1 lakh units at a price of 5,000 each. So as of now, we are able to sell 1 lakh units. Even if I have the capacity of 4 lakh, we are able to sell 1 lakh at a price of 5,000. The demand thereafter would double for each 500 unit fall in the selling price. So if you reduce the selling price by 500 rupees, your demand will get double. Now, if again I am reducing the price by 500 rupees, 4,500 will become 4,000. My demand will again get double. This 2 lakh will become 4 lakh units. So, if you want to use your full capacity and sell all the units, then you will be able to sell at 4,000 rupees only. If the company expects a minimum margin of 25%, what would be the target cost per unit for the company to sell at full capacity utilization? So this is the full capacity utilization. At that, our selling price is going to be 4,000 rupees and the margin is 25%. They are not mentioning that the margin is on the basis of cost or sales. You are going to take it on the sales only. So 4,000 minus 25% will give you a 3,000 rupees as the target cost. Done. Moving forward, a particular job MB requires 800 kg of a material. 500 kg of that particular material is currently in stock. The original price of the material was 300 rupees, but current resale value for the same has been determined at 200 rupees. So we want total 800 kgs, out of which 500 is already there in our stock. And for this 500 kgs of material which is already there in stock, they are telling us the original price and current resale value. I have already told you in the class that your current replacement price for the material which is already there in stock is of no use to us. The original price is also no use to us. Then the remaining is only current resale value here. So current resale value is what you need to take for this 500 kg already there in your stock. Okay? But remaining 300 kg is also required. We require total 800, out of which 500 is only there with us. So 300 has to be bought from the outside market. So if you're buying anything from the outside market, you're going to take the outside market price, that is current replacement price. So at 0.80, which is equal to 240. So 200 plus 240 is equal to 440 is your relevant cost of material here. Next, the profit volume ratio of Devon Limited is 30%, while the margin of safety is 40%. If the fixed cost is 1,80,000, what will be the profit here? So to calculate profit, I need margin of safety is equal to profit upon PV ratio. We already know that. We already know our PV ratio as 30%. We have to calculate margin of safety also to get our profit. So how to calculate margin of safety? For this, I am going to use my break-even point sales, because that can be calculated with the help of fixed cost upon PV ratio. Fixed cost is 1,80,000 divided by PV ratio is 30%. 1,80,000 divided by 30% is equal to break-even point sales is 6 lakh rupees. If your margin of safety is 40%, break-even point is going to be 60%, because the total of both of them is the actual sales. So if margin of safety is 40%, break-even point is 60%. So I already know that 6 lakh is 60%. We want to calculate margin of safety, which is 40%. So 6 lakh divided by 60% into 40% will give you 4 lakh as the margin of safety, is equal to profit upon PV ratio is 30%. So 4 lakh into 30% will give you profit of 1,20,000, and this is your answer. During which phase of the product life cycle sales rise at an increasing rate? So our product has different stages of life cycle. The first stage is introduction, when you are introducing the product. At that time your sales increases, but not at an increasing rate as such. But when the growth happens, your sales increases at an increasing rate, huge increasing rate. Then you reach a maturity stage. At that time also sales is increasing, but not at an increasing rate, now at a decreasing rate. And then you reach a decline stage. At the decline stage, your sales starts decreasing now. Okay? So, if these are the situation, then your sales rise at an increasing rate happens only at growth. Now, an increase in the selling price per unit will cause a decrease in the number of units required to break even, an increase in contribution margin, an increase in margin of safety, or all of the above. So what is happening? Selling price is increasing. Nothing else is getting changed. Your selling price is the only thing which is going to increase. And if that happens, then your break-even point units is going to reduce or increase. Break-even point units. How to calculate this? You will take your fixed cost upon contribution per unit. How contribution is made up of selling price and variable cost? If variable cost remains as it is, your selling price is increasing. That means your total contribution is going to increase. If contribution increases, fixed cost remains same as it is. That means your break-even point units is going to decrease. Okay, so this point is correct. Next point says an increase in contribution margin ratio. So due to increase in selling price, will your contribution margin ratio will also increase? So for calculating that, I'm assuming that, let's say my selling price earlier was 100 rupees, my variable cost was 60, my contribution was 40. So as of now, my contribution to sales ratio, contribution margin ratio is nothing but contribution to sales ratio, was 40 by 100, that is equal to 40%. But if my selling price increases, other things remain same. Let's say my selling price became 120, my variable cost is as it is. So my contribution is going to be 60 now. Contribution upon sales into 100 is equal to 50%. So due to increase in selling price, my contribution margin ratio is also increasing. Earlier it was 40, now it has increased to 50%. So this is also correct. An increase in margin of safety. So due to your selling price increase, your margin of safety will also increase. Yes, of course. Why? Because your break-even point units has been reduced. And what is margin of safety? Margin of safety is your actual units sold minus break-even point units. So if your break-even point units reduced, your actual units sold is exactly same. That means your margin of safety is going to increase. So this is also correct. Hence, all of the above is what you need to tick here. Okay? Next. Question number 17. Jackson Limited sells its product at 8,000 rupees per unit is our selling price. Variable cost per unit for manufacturing is 4,000. For selling and advertisement it is 80. Then fixed cost is 20,000. Manufacturing overhead and 20,000 fixed cost for manufacturing overhead and 30,000 for selling and admin overhead. There was no beginning inventory as such. Production was 25 during the month and sales is 20 units. So if there is no as such opening inventory, that means if you are producing higher and selling lesser, then the remaining is your closing stock. Production minus sales, 25 minus 20 will give you the closing stock of 5 units. What will be the income under absorption costing for the month? So you have to use your absorption costing system, in which what we do for calculating income, first we write the sales. Sales is calculated for the units sold, which is 20 units multiplied by 8,000 per unit. Then we consider all our production related cost. In production cost, the first one is variable manufacturing cost. See, whenever we use absorption costing, we are going to consider fixed and variable both type of production cost here. So, variable manufacturing cost is 4,000 rupees multiplied by, whenever you are considering production related cost, you are going to consider this on production units, which is 25. Then our fixed manufacturing cost, which is 20,000. For fixed manufacturing cost, we calculate a predetermined rate in absorption costing. But for calculating predetermined rate, you should know what is the units which you expected to produce, what is the fixed cost which you expected, but all of that is not given to us. So we'll assume that this is the fixed cost of 20,000 and this is the exact amount which we are absorbing. Nothing else is different here. This will give you cost of production. So 4,000 into 25 is equal to 1 lakh rupees. 1 lakh plus 20,000 is 1,20,000 and the sales is 1,60,000 rupees. After cost of production, we are going to calculate cost of goods sold by adjusting our opening and closing stock of finished goods. There is no as such opening stock, so only closing stock of finished goods is going to be considered here. Out of 25 units which we are producing, we are selling only 20 units. That means 5 units are there in closing stock. For calculating their value, we are going to take the cost of production, which is applicable for 25 units. We want to calculate for 5 units. 1,20,000 divided by 25 into 5 will give you 24,000 rupees. And if I reduce this, I am going to get my cost of goods sold, which is equal to 96,000. Then consider all your remaining costs, which is related to selling and admin. First, we have variable cost of 80 rupees. Now, selling and admin is applicable only for the units which you are selling, and that is 20 units. So this is 1,600 plus your fixed wala selling and admin cost, which is 30,000. So 96,000 plus 1,600 plus 30,000 is equal to 1,27,600 is the total cost which you have incurred, and this is the sales amount. 1,60,000 minus 1,27,600 will give you 32,400 as your income, which is your profit here. Okay? Next question. A production of Zone Limited has the capacity to produce either 4,000 units of A, 3,500 of B, 5,000 units of C. Only one product can be made in a production period. Plus with that, if you notice, only one product can be made in a production period related question was also there previously. But in that question, there was no limitation as such for the demand. But here we have the limitation of the demand or the units which we can produce. Okay? Hence, we can't decide only on the basis of production per unit. We have to calculate the total contribution and then decide what is the product which we will produce. So A, B, C, the total contribution is 4,000 into 10 is 40,000. 3,500 into 11 is 38,500 and 5,000 into 8 is 40,000. So out of all of these, A and C are giving us the exact same amount of contribution. But we are selecting A to produce. A is selected to produce and you have to calculate opportunity cost of A. So if I select A to produce, what is the opportunity cost? Next best alternative, which is foregone. So out of these two alternatives, what is the next best alternative? C is the next best alternative with 40,000 rupees. Hence 40,000 rupees is the opportunity cost here. Okay. Next, Robinson Limited, a manufacturing company, has a break-even point when sales are 10 lakh rupees, fixed cost of 4 lakh rupees. Okay. So at sales of 10 lakh rupees and fixed cost of 4 lakh rupees, we are reaching break-even point. Hence, this sales is break-even point sales. To realize profit of 2 lakh from sales of 3 lakh units, what should be the selling price? So, for this, first I have to calculate what is the PV ratio applicable here. PV ratio is break-even, fixed cost upon break-even point sales. Fixed cost is 4 lakh upon break-even point sales is 10 lakh. This will give us 40% as the PV ratio. Okay? I already know what is the target profit which I want to earn. So I can calculate the sales to earn the target profit. The formula is fixed cost plus target profit upon PV ratio. Fixed cost is 4 lakh rupees. Target profit is 2 lakh rupees. Divided by PV ratio is 40%. So 6 lakh divided by 40% will give you 15 lakh as the sales. 15 lakh is the sales for total 3 lakh units which are required for earning this target profit of 2 lakh. So 15 lakh divided by 3 lakh will give you a price of 5 per unit. Next, Amon Limited plans to introduce a new product ZOS and is using target costing approach. The selling price of product ZOS is set at 120 for each unit and sales revenue for the coming year is expected to be 9,60,000. Okay, so 120 is the selling price and 9,60,000 is the total sales which you are having. If that is the case, then what is the number of units which you are selling here? 9,60,000 is the sales and 120 per unit is the selling price. So 8,000 units is what we are selling here. The company requires a return of 15% on the coming year on investment of 20 lakh. 20 lakh is the investment multiplied by 15% is the return. That means 3 lakh is the return which we want from here. Return is your profit. Hence your target cost will be 6,60,000 rupees. And if I have to calculate on per unit basis, I'll divide this by 8,000 units. 6,60,000 divided by 8,000 will give you 82.5 as the target cost. Done. Next, X Limited has annual turnover of 200 lakh and average contribution sales ratio of 40%. It makes 10% profit on sales before charging depreciation and interest, which amounts to 10 lakh and 15 lakh respectively. The fixed cost of X Limited will be. So I already know my sales is 200 lakhs. And contribution to sales ratio is 40%, which will give us the contribution of 80 lakh rupees. 200 lakh into 40% is 800 lakhs. And the profit is 10% on sales. 10% on sales is 20 lakh is the profit here. And if I reduce contribution from profit, I can know my fixed cost is 60 lakh rupees. Okay? Now, this 10% profit on sales which we calculated is before charging depreciation and interest. But if you notice, whenever we consider fixed cost here, we consider all the operating related fixed cost. That means it also considers depreciation. So, rather than considering only 60 lakh as the fixed cost, I should consider 10 lakh also. That gives us 70 lakh as the fixed cost. But we are not calculating the operation related only fixed cost. The question says you need to calculate the fixed cost for the company. And for the company, so this interest is also a fixed cost. Hence, this fixed 15 lakh should also be considered here. And we are getting 85 lakh as the fixed cost for the company. Okay? Next. Total Limited has 200 units of an obsolete item. This question though we have already seen about, similar kind of question is there in here also. 200 units of an obsolete item which are carried in inventory at original price of 36,000. Original price is irrelevant of obsolete item. If these items are reworked at 12,000, we can sell it at 21,600. So 21,600 minus 12,000 will give you 9,600 as the profit here. Alternatively, they can be sold at a scrap value of 3,600. So out of these two, which one you are going to prefer? You are going to prefer this one. If you are preferring this one, which is a reworking situation, then what is the opportunity cost of the same? 3,600, the next best alternative which you foregone. Next, While Limited is using the target costing approach, the following data has been collected. Expected revenue is given to you on a per unit basis, it is 15 and total is 75 lakh. So if I calculate the number of units, this is 5 lakh units. And the desired profit which we want, if we are using target costing, that means selling price is already fixed, your profit is already fixed of 9,50,000 is for 5 lakh units. Hence on per unit basis it is 1.9. So your target cost will be 15 minus 1.9, which is equal to 13.1 on a per unit basis. If they are asking us target cost, I will not consider any other cost. I'll directly calculate the total target cost on a per unit basis, which is 13.1. Okay? Next. Here you need to make your income, calculate the income under absorption costing. We are producing 300 units and selling 240 units at a selling price of 600. The following information is given to you: variable cost, fixed cost for manufacturing and selling, and no opening inventory is there. So if you are producing 300 and selling 240, that means 60 is going to be your closing stock. So let's calculate. First we are going to calculate the sales amount, which is 240 into 600 rupees, that is equal to 1,44,000. Then your cost of production, which is also known as production cost. Variable cost is given on a per unit basis. We'll assume that this variable cost is related to production only. 330 multiplied by 240 units will give you 79,200, and then your manufacturing overhead, fixed manufacturing overhead of 21,000, as there is no as such predetermined rate related calculation is given. Hence we are directly taking this 21,000. So we are getting 1,200,000. 330 is your variable cost, right? Okay, this 330 of variable cost is applicable on 300 units, right? Because we are producing 300 units. So 99,000 is what you're going to consider, plus 21,000 will give you 1,20,000 as the production cost. So whenever you are calculating production cost, you're going to take the production units, which is 300 units. Whenever you are calculating the sales, you're going to take the units sold. Then after production, we are going to adjust opening and closing stock of finished goods. As there is no opening stock, we are only adjusting closing stock. So 1,20,000 of cost of production is applicable for 300 units, out of which 60 units is there in closing stock. 120 divided by 300 into 60 will give you 24,000. So 120 minus 24 will give you 96,000 as the cost of goods sold. Now add your other cost which we have of selling and admin of 30,000. There is only fixed cost here, no variable cost is given to you. So 96 plus 30 will give you 1,26,000. This is the total cost of sales, and 144 is the sales amount. So we are getting a profit of 18,000 here. Okay. Next, target costing is the answer to market driven prices, seller's market, no profit situation, none of the above. So target costing is the answer to market driven prices, where the price is decided by the market. Target costing is not the answer to seller's market. If it is a seller's market, that means seller can decide what should be the price. But that not happens in target costing. In the target costing, price is already decided by the market, profit is decided by the investors. Hence, target cost is only the thing which we can, cost is only the thing which we can control here. Okay? Next, so this is your correct answer. Question number 26. Synth Limited determined its selling price by marking up the variable cost by 50%. So, selling price is decided by charging a markup of 50% on variable cost. So we'll take our variable cost plus markup at the rate 50% of variable cost. This will give you a selling price here. Okay? In addition, the company uses frequent selling price markdown to stimulate sales. So this is how we set the selling price, but after setting the selling price, we reduce the selling price also somewhat so that we can grab more market. If the markdown average is 20%, if we are reducing the selling price by 20%, what is the company's contribution margin ratio? So whenever the question is only providing you percentages, it is better to assume some things. Like I can assume my variable cost, let's say as 100. So if it is 100, my margin is 50% of variable cost. So this is going to be 50. Adding both of them will give me the selling price of 150. So after getting 150 as the selling price, we decided to mark down the selling price by 20%. 150 minus 20% will give you 120 as the selling price. But your variable cost will remain as it is, no changes in the variable cost. Hence, what will be your margin? Your margin is contribution only here, because think about it, selling price minus variable cost is your contribution margin. So if selling price is 120, variable cost is 100, then my contribution margin is 20. Now they want us to calculate contribution margin ratio. So divide your contribution with your sales price. 20 divided by 120 into 100 will give you 16.67%. Hence, first one is the correct answer. Next, the income statement of Boma Limited is summarized as follows. We have net revenue, and then in this expenses, 60 lakh is fixed cost. So out of 132, if 60 is fixed, that means 72 is variable. The manager F&A believes that an increase of 30 lakh as fixed expenditure in advertising outlay will increase the sales substantially. As of now, we are incurring 60 lakh as the fixed cost, and we are thinking of increasing it by 30 lakh. Hence, our fixed cost will become 90 lakh rupees. At what sales value will the company will break even? So you need to calculate the sales amount at which we will reach break-even point. How to calculate the sales amount of break-even point? Break-even point sales is fixed cost upon PV ratio. I already know the increased fixed cost is 90 lakh rupees. What is the PV ratio applicable? There is no as such changes in the variable cost mentioned. Hence, variable cost is 72 and net revenue is 120. So 120 minus 72 will give you a contribution of 48. 48 is the contribution at net revenue of 120. Hence, 48 divided by 120 will give you PV ratio of 40%. So 90 lakh divided by PV ratio of 40% will give you 225 lakh as the sales, and this is your break-even point sales. Okay, next. So we Limited manufactures mobile phone. The potential market over the next year is 10 lakh units is what we can sell. But we have a capacity of only 4 lakh units, since we will be able to sell at max 4 lakh units. But as of now, we are selling only 1 lakh units at 10,000 rupees. So 1 lakh unit is what we sell at 10,000 as the selling price. So whenever you double the demand, your selling price will get reduced by 1,000 rupees. So this will reduce by 1,000 rupees if you are doubling the demand. If I double it again, my selling price will become reduced by 1,000 again, hence 8,000 rupees. Okay? And stopping at 4 lakh only because 4 lakh is the capacity which is available to us. If your target margin is 25%, so 8,000 is the selling price, 25% is the margin. Hence, our target cost is going to be 6,000 rupees if I am selling all the full capacity here. Okay? Done. Moving forward to the next scenario, we have sales for 2 different years, that is 2018 and 2019. 8 lakh is the sales here and 7,92,000 is the sales here. Now this is an interesting question. Plus with that, this is not a question of your standard decision making techniques. This is a question of evaluating performance, that is standard costing. Okay? How it is a question of standard costing, we'll understand that. But if you see this question like this only, you'll feel that it is a question of decision making, but you have to understand the base to understand that this is not a question of standard decision making, it is a question of standard costing. So with that, they are also providing us cost of goods sold, 4,80,000 here and 4,64,000 here. In the year 2019, selling price was reduced by 10%. In 2019, we have reduced the selling price by 10% as compared to that of 2018. What was the decrease in gross profit? What is the change in gross profit which is going to happen due to change in selling price? So they actually want you to calculate the sales margin price variance. That due to change in selling price, what is the change in sales margin happening with you? So this can be calculated with the help of sales price variance or sales margin price variance, because both of them gives you the exact same answer only. Sales price variance and sales margin price variance, if you calculate, you're going to get exact same value. Okay? So what I'm doing is I'm directly using my sales price variance. How we calculate sales price variance? For that, I'm taking my budget and actual information given to us. Budgeted is the previous year related information, that is 8 lakh rupees is the sales happening here, and actual is 7,92,000. We already know that there is a 10% reduction in selling price in the actual. So can I say that if my budget has 100 rupees per unit as the selling price, then my actual is having a selling price of 90 rupees per unit? But tell me one thing, the difference between your sales volume is only the difference of your sales price. Answer is no. We have output related difference also, volume related difference also. Hence, we have to consider that here. For that, what I'm doing is, I'm keeping the selling price exactly same as that of my budget. So I want to know what is the actual quantity which I'm selling and what is the actual quantity multiplied by standard price. ठीक है. So if I take the standard price, what is the actual quantity multiplied by standard price value is there. How to calculate this? We'll take our 7,92,000, which is our actual sales. This actual sales is for 90 rupees per unit, but we want to know for 100 per unit. So 7,92,000 divided by 90 into 100 will give you 8,80,000. Now if you notice here and here, the selling price is exactly same. That means if I take the difference between these two, I'm going to get the volume related variance. Okay? But in these two situations, the volume is exactly same, but the selling price is different. Hence, here if I take any difference, I'm going to get the sales price variance, and that is what we have to calculate here. Whenever you are calculating sales related price variance, you're going to keep the actual first and then your standard. So actual is 7,92,000 minus standard is 8,80,000. This will give you 88,000 adverse. And that is what is mentioned here. That what is the decrease in gross profit? 88,000 is the decrease in gross profit. Okay. So 88,000 is the correct answer. Now moving forward to the next one. Holiday Card Company, a producer of a specialty card, has asked you to complete several calculations based upon the following information. So we have income tax rate, selling price per unit, variable cost per unit, and total fixed cost. How many cards must be sold to earn an after tax net income of 18,480? Whenever they provide you after tax net income, it is always better for you to calculate profit before tax first. Profit before tax minus taxes is how we get this profit after tax. Okay? So if I have this profit before tax at 100%, income tax rate as 30%, that means my profit after tax is going to be 70%. If this is 100 minus 30 will give you 70% only. I already know this 70% value, which is 18,480. I want to know profit before tax, which is 100%. So 18,480 is 70. We want to know 100% value, which is equal to 26,400. This is the profit you want to earn. So this is your target profit. Use your target profit related formula to calculate the number of units. So units is equal to fixed cost plus target profit upon contribution per unit. Fixed cost is 46,200. Target profit which we want to earn is 26,400 divided by contribution per unit is selling price is 6.6 minus 5.28 is variable cost. So 1.32 is what we are getting. 55,000 units is what you need to sell to earn a target profit of 26,400. Done. In cost plus pricing, the markup consists of, in cost plus pricing, the markup. Cost plus pricing is what? Cost plus a specific markup is added here. So what is this markup? Markup is the profit which you want to earn, because all the costs we have already considered here. So markup is going to be the profit which you want to earn. Okay? Your markup is not going to be total cost plus desired ROI, because cost is already considered. In the markup, I am only going to consider the returns. Selling and admin cost, answer is no. Manufacturing cost, answer is no. The return is only there as the markup here. So the D option is the correct one. Next, only direct material, direct labor and variable manufacturing overhead are considered on product cost when using absorption costing. So we consider all the variable and fixed cost both. Full costing is nothing but absorption costing only. It's just a different name for absorption costing. Variable costing is the one where we consider all the variable cost in your product related cost. When there is excess capacity, it makes sense to accept a one-time only special order for less than the current selling price when. So let's assume I have a capacity of 4 lakh units, but out of this, for my normal business, I'm able to use only 3 lakh units. That means I have excess capacity of 1 lakh units. When to use this excess capacity? If your incremental revenue is more than incremental cost, if whatever revenue you are earning from this units is higher than whatever cost is incurred specifically for this units, that is when you're going to prefer this usage of excess capacity. Additional fixed cost need not be incurred to accommodate the order. Answer is no. If for this order additional fixed cost is incurred, but even after incurring additional fixed cost, I'm able to earn higher revenue here as compared to whatever cost I'm incurring, I'm going to prefer this one. So this is not correct. There is a positive contribution per unit of the product under normal and spare capacity. So if positive contribution is there or not in normal capacity is not going to impact my spare capacity specifically. Hence, this is not also correct. The special order is from normal customer. From normal customer, if I'm getting any special order, then you should never accept that. Why? Because you are reducing the selling price. If you reduce the selling price for your normal customer also, you'll not be able to sell from the next time this units for normal prices. You have to reduce all your prices. Hence, this is not at all preferable situation. So the preferable situation is when incremental revenue is higher than the incremental cost. A company that is price taker. Price taker means the one who is going to just take the price from others or from the market. So market driven prices are there. Whenever you have market driven prices, you are going to use target costing. That is the best approach which you can use here. If the unit level of inventory increases during an accounting period, in the accounting period your inventory is increasing. Now what does that mean? Does it mean that your opening stock is increasing or your closing stock is increasing? So think about it. If I am in this particular accounting period, so I can't change the opening stock because that is coming from the previous period. In this period, only closing stock can be changed or increased. So in this question, when they are saying unit level of inventory is increasing, that means our closing stock is higher here. And whenever closing stock is higher, you need to understand that we have two different types of costing method. First is absorption costing and second is variable or marginal costing. You can call it as variable costing, you can call it as marginal costing, both are exactly same thing. Okay? So what happens in absorption costing? Absorption costing takes whether it be your variable cost or fixed cost of production, we take all of that in our closing stock. But in your marginal costing, we take only variable cost to our closing stock. Now why this happens? Because your cost of production calculated in absorption costing is going to have variable and fixed cost both. Hence closing stock also has variable and fixed cost both. But your marginal costing only charges variable cost and cost of production. Hence your closing stock also contains variable cost only in marginal or variable costing. Okay? And if that is the case, then always your closing stock is going to be higher for your absorption costing as compared to that of your variable costing. Plus with that, if closing stock quantity is higher than the opening stock, that means whatever fixed cost is coming from the previous year to the current period in absorption costing, that is going to be lower as compared to whatever fixed cost we are taking from this period to the next period with the help of closing stock. Hence, we can say that in absorption costing, we are taking a lot of fixed cost to the next period. And if we are transferring a lot of fixed cost to the next period, that means we are charging lesser cost under absorption costing as compared to that of variable costing, because variable costing is going to charge all the fixed costs in the current period itself. Hence, your profit under absorption costing is going to be higher. More operating income under absorption costing as compared to that of variable costing. Okay. Next, dash is the difference between the sales price needed to capture a predetermined market share and the desired profit per unit. Difference between predetermined market share and the desired profit. Predetermined market share means your selling price as per the market minus desired profit gives you target cost only. Okay. Dash is a period of time when sales increases at a decreasing rate. Sales is increasing but now at a decreasing rate. And if that happens, you are at maturity stage. Because at the decline stage, your sales will start decreasing rather than increasing. At your growth stage, sales increases at an increasing rate. At your introduction stage, the sales is very low. We can't say that it is going to increase in the introduction stage itself. NM paid 5,30,000 for a machine used to powder wheat. The machine can be sold at 1,30,000. Original purchase price is always irrelevant. Okay? The sale value of wheat is 8 lakh and variable cost is 4,50,000. 8 lakh is the sales value of wheat and 4,50,000 is the cost. That means 3,50,000 is what we are earning if you are using the machine for making the wheat. The opportunity cost of producing wheat flour is. So by producing wheat flour, we are able to earn this 3,50,000. But for earning this 3,50,000, we have to incur or we have to let go of this 1,30,000 rupees which we can earn by selling the machine. Hence 1,30,000 becomes our opportunity cost. Which one of the following will always be relevant? Your fixed cost is mostly irrelevant. So this is not gonna be always relevant. Your sunk cost is always irrelevant. Your variable cost can sometimes becomes relevant, but sometimes it can also happen that your variable cost is irrelevant. When it happens, let's say in both the situations, my variable cost is exactly same. In that case, your variable cost can also become irrelevant sometimes. But your opportunity cost is always relevant. What is opportunity cost? Next best alternative which you foregone. Whatever you can earn from that next best alternative, that is the opportunity cost considered here. Hence, it is going to be always and always relevant. Okay? The break-even point of a manufacturing company is 1,60,000. Fixed cost is 48. You can very easily calculate the PV ratio 48,000 of fixed cost divided by break-even point sales. So 48,000 divided by 1,60,000 will give you 30% as the PV ratio. What is the opportunity cost of making a component part in a factory given no alternative use of the capacity? Now this is something important. You need to calculate opportunity cost. What is opportunity cost? Next best alternative, which is foregone. You need to calculate the cost of it. But the question is saying that there is no as such alternative available. So if there is no as such alternative available, there is no alternative which is foregone. If there is no alternative which is foregone, hence there is no opportunity cost here. Okay? The product of XYZ company is sold at a fixed price of 1,500. Now this question we have already seen above, but let's complete it as fast as possible. So we have a selling price of 1,500 and the investment is 15 lakh rupees. Target ROI is 15%. So 15 lakh into 15% is 2,25,000. This is the profit which we are earning for 500 units. That means on every unit you are earning a profit of 450. So if I calculate the target cost, that is going to be 1050, and that is what the question was asking here. Next. T Limited produces and sells a product. The company expects the following revenue and cost in 2018. Revenue is 2,40,000. 400 sets is what we are selling. Contribution variable cost is 1,60,000. 50,000 is the fixed cost. What is the amount of sales? What amount of sales must T Limited have to earn a target profit of 63,000 if they target net income of 63,000 if they have a tax rate of 30%. Net income means this is after taxes. After charging 30% as the tax, we are able to earn this 30%, 63,000. So this is profit after tax. I already told you whenever the question is providing you profit after tax, you have to calculate profit before tax. Profit before tax is 100%. This is 30%. That means your profit after tax is 70%. So 63,000 denotes 70%. We want to calculate the value of 100% and that is 90,000. Okay? This is the profit which we want to earn and we have to calculate the sales for the same. So fixed cost which is 50,000 plus target profit which is 90,000 divided by PV ratio. To calculate PV ratio, I need to reduce my sales of 2,50,000 with 1,60,000 of variable cost. I am getting contribution as 80,000 divided by sales is 2,40,000. This gives us 0.33333 as the PV ratio. So 50,000 plus 90,000 divided by 0.33333. This is equal to 4,20,000. This is the sales which you have to have if you want to earn a target net income of 63,000 rupees. Excel Products Limited manufactures 4 product E, F, G and H using same raw material. The input requirement for product E, F, G and H are 1 kg, 2 kg, 5 kg and 7 kg of raw material respectively. Product wise selling price and variable cost is given to you. Assume raw material as the limiting factor and you need to rank the products. So whenever we have a limiting factor, we rank the products on the basis of contribution per limiting factor. So first we have to calculate the contribution, which is 175, 100, then this is 80, then 50. And your raw material per unit, this is contribution per unit and raw material per unit is 1, 2, 5 and 7. So 50, 40, 20 and 175 divided by 7 is 25. So if I rank the products, this is the first rank product, this is second, this is third and this is fourth. So E, F, H and G. E, F, H, G. So option number B is the correct answer. Shadow price, we have already seen that the contribution will be increased by 10 per hour for each extra hour of skilled labor that can be obtained. A break-even point when a company has break-even point when sales are 3,20,000. So this is our break-even point sales. Variable cost at that level is 2 lakh. How much contribution margin increase or decrease if variable expenses are dropped by 30,000? So my break-even point sales is 3,20,000. At that particular point, my variable cost is 2 lakh rupees. So my contribution is 1,20,000 for our break-even point situation. 1,20,000 divided by 3,20,000 will give you 37.5% as the contribution margin here. But what happened is my variable cost dropped by 30,000. So my sales is as it is 3,20,000, but my variable cost is the only thing which is dropped by 30,000. So my contribution will be 320 minus 170 will give you 1,50,000 as the contribution. Divided by 3,20,000 into 100 will give you 46.875% as the contribution margin ratio. So due to drop of variable cost by 30,000, there is an increase in contribution, and that is by 9.375%. Increase in contribution by 9.375%. Okay? Next. A company has the capacity of producing 80,000 units, but presently they are selling 20,000. You need to tell that what is the target cost at the full capacity. So for full capacity, what to do? Your selling price will get reduced by 10 for every time when you are doubling the units. This type of question we have already seen. As of now, we are selling 20,000 units at 100 per unit. Reduce the price by 10 to double the units, and again to double the units, reduce the price by 10. So this is the price we are getting for this full capacity of 80,000 units, minus 25% of margin will give you 60 per unit as the target cost. Next, a factory can make only one of the three products XYZ. This is the question we have already seen above. We are having a contribution of 1,000. See, a lot of questions are getting asked again and again as they have been asked in the previous attempt. And that is why the previous attempt related MCQs becomes most important for us, because the questions are exactly same every time. Similar kind of questions is what institute is asking. Okay? So 1800 minus 950 will give you 850 here, and 1500 minus 700 will give you 800 here. So opportunity cost of 1 unit of Z. Z is what we are going to prefer because that is having the higher contribution per unit. So what is the opportunity cost of Z? The next best alternative. So out of the remaining two alternatives, the next best is Y with 850, hence 850 is the correct answer here. AB company is a supermarket group that incurs the following costs: the bought-in price of the goods, inventory finance cost, self-refilling cost, cost of repacking or pack out prior to storage before sales. But with that, this question should have this point also. This is an incomplete question in the PDF, hence I added this. In your PDF, which I am going to provide you in the Telegram, that will have this point also. Okay? AB company is calculating direct product cost, direct product profit would include. So what is direct product profit which our company is calculating? Direct product profit means the profit specific from that product itself. So whatever is the cost incurred for that product, I'm going to consider all that cost. Okay? It doesn't matter whether it is direct, indirect or any kind of cost, doesn't matter. I'm going to consider all the cost which is incurred for the product for calculating the profit of that product only. Okay? So you have to tell that or what all costs you're going to consider out of all these costs which is incurred for a particular product. So we will consider all the costs. That means bought-in prices of the goods will be considered. Inventory finance cost will also be considered here. Inventory finance cost is holding cost of the inventory, right? And this should be considered so that we can penalize the slow moving inventory. So slow moving inventory has higher inventory finance cost as compared to that of the fast moving inventory. So we have to consider that also. Self-refilling cost. So labor who is putting the stock in the shelves of the supermarket, that self-refilling cost should also be considered here. And the cost of repacking or packing the material so that we can keep them in the shelf, that cost should also be considered because that is incurred for the product. So all the above costs will be considered when you are calculating the direct product profit. Okay? H group has two divisions, division P and Q. Division P manufactures an item that is transferred to division Q. The item has no external market. So there is no as such external market available, and 6,000 units are getting transferred each year. Every unit which P is transferring to Q, there is a variable cost of 100 per unit. So we are transferring 6,000 units. 100 per unit will give you 6 lakh rupees as the variable cost. And fixed cost incurred by division P is 1,20,000. So total 7,20,000 is what division P is incurring for this 6,000 units which they are transferring to division Q. Head office management decided that a transfer price should be set that provides a profit of 30,000 to division P. So division P should earn a profit of 30,000 over the cost which they are incurring. So 7,50,000 is what they will charge. And you need to tell the transfer price on a per unit basis. So 7,50,000 is for all the units divided by 6,000 units which we are transferring. Will give you 125 as the transfer price. Okay, option number B is the correct answer. A company requires 85 lakh in sales to meet a target net profit. Its contribution margin is 30% and fixed cost is 15 lakh. You need to tell what is the target net profit. This is very simple. So sales is given to you as 85 lakh. Contribution is 30%. So 85 lakh ka 30% is equal to 25 lakh 50,000 minus your fixed cost of 15 lakh will give you the target profit which we want to earn, and that is 10 lakh 50,000. Done. Next, By making and selling 9,000 units of a product, a company makes a profit of 10,000. So by selling 9,000 units, profit is 10,000. And whereas in case of 7,000 units, there is a loss of 10,000. You need to tell what is the units which you need to sell to reach your break-even point. Now, do you remember that there is a formula for PV ratio, that is change in profit upon change in sales? But here sales is not given to you. So what I'm going to do is I'm going to take the change in profit upon change in units directly to calculate my contribution per unit. Okay? So change in profit upon change in units will tell me the contribution per unit. Change in profit is 10,000 minus 10,000 will give you 20,000 as the change, and 9,000 minus 7,000 is 2,000. So 10 per unit is your contribution per unit. So 9,000 units multiplied by 10 per unit will give you a fixed cost of contribution of 9,000 into 10 per unit is 90,000. Hence our fixed cost will be 80,000 units, 80,000 rupees here. Here also you can calculate, you're going to get the exact same thing. Your contribution is 7,000 into 10, which is 70,000. Fixed cost is 80,000, and that is why you're getting 10,000 negative as the losses here. Okay? Now you need to find out what is the units at which you will reach break-even point. So for calculating break-even point, we take fixed cost, which is 80,000, divided by contribution per unit, which is 10. This will give you 8,000 units as the break-even point. Next, 1,200 units of microchips are sold to earn a profit of 1,06,000 in the monopoly market. This question we have already seen previously, but let's calculate it as fast as possible. Profit, then your fixed cost is 74,000. If I add both of them, I can get my contribution. 1,06,000 plus 74,000 will give you a contribution of 1,80,000. Now this contribution is 3/4 of variable cost. So if my variable cost is 1, my contribution is 0.75. And 1 plus 0.75, that means my sale is going to be 1.75. So 1,80,000 denotes 0.75. I want to calculate 1.75, which is equal to 4,20,000. Now this 4,20,000 is for 1,200 units. That means for every unit we are having 350 as the selling price. Okay? If project A has a net present value of 30 lakh and project B has a net present value of 50 lakh, you're going to prefer the project which is having higher net present value. That means project B is going to be preferred. So what is the opportunity cost of project B? Next best alternative, which is 30 lakhs. Okay? Next. Empire Hotel has a capacity of 100 single rooms and 20 double rooms. Single room and double room. There are 100 single room and 20 double room, and the occupancy is 70%. Out of 100, 70% is occupied, and out of 20, 70% is occupied, and this is occupied for total 365 days. So 100 into 70%, 20 into 70% will tell you your number of rooms which are occupied, multiplied by days will give you total room days which we are having. So 100 into 70% into 365 is equal to 2550, and 20 into 70% into 365 will give you 5110. Now this is double rooms, this is single room. The question says the rent for a double room is kept at 130% of single room. So if the rent of single room is 100, then 130%, that is 130 is going to be the rent for the double room. The total room occupancy days in years in terms of single room. You have to tell total number of room days in terms of single room. That means you have to convert this double room also in the single room by using your equivalent units calculation. So what we do in equivalent unit calculation, we already know that this is single room only. Hence multiplying it by 100%, this gives me 2550 only. But this is double room which has a rent of 130% of single room. So I'll directly multiply this 130%. I'm getting 6643. Now what does that mean? It means that if you are having 5110 rooms of double room, whatever rent you are going to earn, the exact same rent can be earned from 6643 single rooms. So we have converted this 5110 double rooms into single rooms. Okay? So the total number of single rooms is 32193. A company produces a product which is sold at a price of 80, variable cost is 32. So 80 minus 32, our contribution here is 48 rupees on a per unit basis. Company has a fixed cost of 11,52,000. So with the help of this, I can calculate my break-even point. 11,52,000 divided by 48. this will give me 24,000 units as the break-even point. Why I calculated the break-even point in units? Because units are given here. The company operates at margin of safety of 40%. The total sales of the company in the units. You have to tell the total sales. How to calculate total sales? I already know my break-even point. I already know that my margin of safety is 40%. That means my break-even point is 60%. So margin of safety will be 24,000 denotes 60%. We want to calculate for 40%. This is equal to 16,000. So 16,000 is margin of safety units plus break-even point units together will give you the total sales units. 24 plus 16 is 40. 40,000 units is the total sales units. Next, the PV ratio of a firm dealing in electrical equipment is 50% is the PV ratio. Margin of safety is 40%. Break-even point of the firm at a sales volume of 50 lakh will be. Okay. So, you have to tell what will be the break-even point of the firm if the sales volume as of now is 50 lakh rupees. So, for calculating break-even point, I can use this margin of safety, right? What will I do? I'll say that this 50 lakh is the total sales amount. That means it denotes 100%. But I want to calculate 60% because if my margin of safety is 40%, that means my break-even point is going to be 60% only. So 5 lakh into 60% will give you, 50 lakh into 60% will give you 30 lakh. Okay, done. Next. ABC Limited has current PBIT of 19.02 on a total asset of 96 lakh. PBIT, that means profit before interest and taxes. I have charged all the cost, whether it be of depreciation or all other costs, but have not charged the interest and taxes. Before charging interest and taxes, we are earning a profit of 19.2 lakh in a total assets of 96 lakh. So if I calculate the return on investment, that is 20% is the return on investment which we are earning as of now. The company has decided to increase the asset by 24 lakh. So this 96 will get increased by 24. Hence, we are going to have the assets of 120 lakhs, which is expected to increase the operating profit before depreciation. Before depreciation, your operating profit is 8.4 lakh. That is the increase which is happening due to this 24 lakh of asset. Okay? But this is before depreciation. But profit before interest and tax denotes after depreciation profit. So we need to reduce the depreciation also from this particular profit. So 8.4 minus 4.8, that is equal to 3.6 is the increase in profit. Earlier it was 19.2. If I increase it by 3.6, this is going to be 22.8. So 22.8 is the return on investment for 120 lakh of assets. That means the return on investment is 19% now. Earlier it was 20%. Now it is 19%. That means there is a decrease by 1%. Okay. Next, marketing department of an organization estimates that 40,000 of new mixers can be sold annually at a 60 per unit of the price. Okay, this is a target costing question which we have already seen a lot of times. Let's complete it as fast as possible. And now the investment is 40 lakh rupees and return on investment is 40%. 15%. 40 lakh into 15% will give you 6 lakh rupees as the profit which you want to earn for all this 40,000 units. That means on every unit you want to earn 15 rupees as the target profit. So if I reduce the target profit from selling price, I can know my target cost as 45 and we are done. Next, which of the following would take place if the company is able to reduce its variable cost? So what will happen to contribution margin and break-even point? Of variable cost is getting reduced, everything else remains same. So sales minus variable cost gives you contribution. So if variable cost is reduced, contribution is going to increase. And if contribution is increasing, your contribution upon sales will also increase. So your contribution margin ratio is going to increase. And if variable cost is reducing, what will happen to break-even point? Break-even point is fixed cost upon contribution per unit. We already know due to reduction in variable cost, our contribution is increasing. So if your contribution is increasing, fixed cost is as it is, that means your break-even point is going to reduce. Okay? Contribution margin is going to increase and break-even point is going to decrease. Increase and decrease. Option number C is the correct answer. Next is question number 61. The following details relate to product P1 of a manufacturing company. We have 1000 and 2000 units. The cost per unit is given to you. Direct material 4 and 4 on a per unit basis. Direct labor 3 and 3 on a per unit basis. Now this shows that if you have cost per unit exactly same in two different situations, that means the cost is completely variable cost only. Because variable cost is the only cost which is constant on a per unit basis. But if you notice, the cost per unit for production and selling overhead is decreasing. That means this contains variable and fixed cost both. So if there is any change which is happening in the cost per unit, that shows that the cost contains variable and fixed both type of cost. The question wants you to bifurcate this fixed and variable cost. How to bifurcate? I already know that these two are variable. In these two we have to bifurcate, right? So 3.5 on a per unit basis for 1000 units. That means total we have 3500 rupees as the cost for production overhead, and 2000 units multiplied by 2.5 will give you 5000 rupees. So to calculate your variable cost per unit, you can take change in cost, which is 5000 minus 3500, which is 1500, upon change in units, which is 1000. So 1.5 per unit is your variable cost, because whatever change happens in the cost is going to happen due to your variable cost only. So change in cost upon change in unit will tell you what is the variable cost on a per unit basis in this production overhead. After knowing this, you can very easily calculate what is the fixed cost. So I'm calculating for this particular units. 1000 units into 1.5 will give you 1500 as the variable cost. So out of 3500, 1500 is variable. That means fixed cost is 2000. Similarly, I can calculate for these units. 2000 into 1.5 will give you variable cost, which is 3000. 3000 minus 5000, that means 2000 is the fixed cost. So for production overhead, I got to know that here the variable cost is 1.5 per unit and fixed cost is 2000 rupees. Next, for selling overhead, 1000 units multiplied by 1 will give you 1000 as the cost, and for 2000 units multiplied by 0.5 will give you 1000 as the cost. So the cost in total is exactly same. That means it is a fixed cost. Your 1000 is completely fixed cost and selling overhead is completely made of fixed cost only. So can I say that fixed cost is 2000 plus 1000, 3000 of fixed cost, and variable cost is 1.5 plus 4 plus 3, 7, 8. 8.5 is your variable cost here. 8.5 is the variable cost and 3000 is the fixed cost. So option number D is the correct answer. Now, a company makes a single product which it sells at 10 per unit. Fixed cost is 48,000 per month and contribution to sales ratio is 40%. In a period when actual sales was 1,40,000, the company's margin of safety in units will be. So, I already know that my actual sales is 1,40,000 and the selling price is 10 per unit. That means, can I say 14,000 units is what we are selling as of now? What is your break-even point units? 48,000 units is the 48,000 rupees is the fixed cost, divided by contribution per unit will give you break-even point units. I already know the PV ratio, which is 40%, multiplied by selling price per unit. 10 into 40% will give you 4 per unit as the contribution per unit, divided by fixed cost. Fixed cost divided by contribution per unit will give you break-even point units. So what is margin of safety? Actual units sold minus break-even point units will give you margin of safety units, which is 2000. Okay? Done. Next, a company has the capacity of producing 80,000 units and presently it sells 20,000 units at 100. Again, they are asking us the target cost. This is very simple and has been asked again and again. Hence, becomes important for you. So, whenever you are doubling the units, your price is getting reduced by 10. Again, double because we have the full capacity of 80,000. Price is reduced by 10. So 80 minus 25% is margin, hence target cost is 60 rupees on a per unit basis. Multiplied by number of units, 60 into 80,000 will give you 48 lakhs as the target cost. The following are the cost data for two alternative ways of processing the clerical work for legal cases brought before the district court. So we have two different types of machines available and the fixed cost is given to you. Let's take the total. Here we have 1,25,000 as the fixed cost and here we have 45,000 as the fixed cost. Okay? Next, your variable cost 80 plus 60, which is 140, and 20 plus 20, 40. Now they want us to calculate cost indifference point. What is indifference point? Indifference point is a point where the cost in these two scenarios is going to be exactly same. To calculate this, we take the fixed cost difference in fixed cost between two different alternatives. So 1,25,000 minus 45,000 divided by difference in the variable cost of two different alternatives. So 125 minus 45 divided by 100 will give you 800 units. So 800 units is the indifference point where the cost under two different situations is going to be exactly same. And we are done. We completed our most lengthy chapter for MCQ purpose also, and that is your chapter number 3. Now we are moving forward to the next chapter, and that is chapter number 4, activity based management and just in time. Let's see what this question says here. Question number 1. Tons Limited manufactures two products BX and BZ using common material handling facility. The total budgeted material handling cost is 80,000. The other details are as follows. So we have product BX and BZ. The total material handling cost is given to you, and the number of products which we are manufacturing of both of them is there. Material movement per product line. For all the products which are produced of BX, we are moving them in total for 15 times, and product BZ is moved for 5 times. Direct labor hour per unit is there, and then unit under activity based costing system, the material handling cost to be allocated to product BZ per unit would be, you have to calculate on the basis of activity based costing. So in activity based costing, this material handling cost is dependent on material movement. So in total we are doing total 20 movements, and for all these 20 movements 80,000 is the cost incurred. 80,000 divided by 20, 4,000 per movement is the cost here. Okay? And we have to calculate for product BZ. For product BZ we have 5 movements, so 4,000 into 5, total 20,000 is incurred here, and this 20,000 is for 40 units. So 20,000 divided by 40, 500 per unit is your cost of handling, which is charged on a per unit basis. Okay? Next is Kanban Japanese system under just-in-time approach ensures. With the help of Kanban system, what happens? Your continuous supply of inventory or product is maintained. Minimum and maximum level of stock is to be maintained. Inventory valuation is done, all of the above. So this Kanban system can only make sure that continuous supply of inventory or product is there, but it cannot calculate your minimum and maximum value or inventory valuation. Hence, first option is the correct one here. The companies that would benefit from backflush costing include companies which have fast manufacturing lead time, whose inventory vary from period to period, companies requiring that audit trail, none of the above. So you need to understand that backflush costing is the costing which is done after completing everything. So after producing your final product, you are recording everything and not recording it in between. That is not used for audit trails. For audit trails, you should have the recording at the time when you are doing that particular thing. Okay? Whose inventory vary from period to period. If your inventory is varying from period to period, you can't use backflush costing. You can use that only and only when fast manufacturing lead time is there. Okay? Aeon Limited, a manufacturer of doors, uses a throughput costing system, is experiencing a bottleneck in its plant. Setup time at one of its workstation has been identified as the offender. The manager has proposed a plan to reduce the setup time at a cost of 5,24,000. So we are incurring 5,24,000 so that we can reduce the setup time here. The change will result in 500 additional doors. The direct labor cost are 22,400 per door, and the cost of material is 8,000 per door. All units produced can be sold if the change will result in an increase in throughput contribution by 56,50,000. What is the selling price per door? So how we calculate this throughput contribution? Throughput contribution is sales amount minus your direct material gives you this throughput contribution. So can I calculate with the help of this throughput contribution what is the sales amount here? So what to do? Throughput contribution plus direct material will give you the sales amount. So I already know the throughput contribution as 56,50,000, and your direct material is 8,000 per door multiplied by 500 doors. So this is equal to 40 lakhs. So the total of this will give me the sales amount, which is 96,50,000, and this is for 500 additional doors. So 9650 divided by 500 doors will give you 19,300 as the selling price per door. Dasan Limited operates a throughput accounting system. The details of product MB per unit are as under. So on a per unit basis, selling price and material cost is given to you, conversion cost is there. If time on bottleneck resource is 10 minutes, what will be the return per hour? What is return per hour? Throughput per unit divided by minute or time per unit will give you return per minute or return per time. Okay? So let's first calculate that. Throughput. How to calculate? Selling price minus material cost will give you throughput of 30. This is on a per unit basis, and I already know the time on a per unit basis, that is 10 per unit. So if I have to calculate return per minute, I can divide the return, which is throughput, with the time per unit. This will give me the return per minute, which is 3 rupees per minute is the return. But we have to calculate the return on a per hour basis. So just multiply this with 60 so that it can be converted into return per hour, that is equal to 180. Next, At KL company, cost of personnel department has always been charged to production department based upon number of employees. Recently, opinion gathered from the department managers indicate that new hires might be a good predictor for personnel cost. So for personnel cost, it is better to use new hires rather than using the number of employees which are there in the department. Okay? So the total personnel department cost is 2 lakh rupees and has to be divided as per the manager's opinion on the basis of new hires. Okay? Details of new hires and number of employees is given to you. On the basis of number of new hires, we are going to divide the cost is to be considered as the cost driver, and department A cost is what you need to calculate. So for that, I will first take the total number of new hires, that is 25. And 2 lakh is the cost incurred for this 25 new hires. That means 8,000 per new hire. We have to calculate for A. So 8,000 is for every new hire multiplied by 8 new hires will give you 64,000 as the cost. Okay. Next, production overhead of XYZ for 500 units of product X is, for machine oriented activity, the overhead is 1,35,400 and material ordering overhead is 69,570. Machine hours are 1.5 hours per unit and number of material orders are 6 per unit. What is the machine oriented cost on a per unit basis and material ordering cost on a per unit basis? So for this, I can use that activity based costing method by calculating first all the cost drivers and then calculating cost driver rate and then multiplying it with the number of units or per unit basis to get the cost. But the thing is, here I have only one type of product and all the units of the product is already available with me. All the cost is already available with me. If I have to calculate per unit cost, I can directly divide this by number of units. So 1,35,400 divided by 500 will give you 270.8 and 69,570 divided by 500 will give you 139.14. So option number 1 is the correct answer. Next, a factory of Rogo Limited has a key resource bottleneck of a facility M which is available for total 48,000 minutes per week. The time taken per unit for product A in facility M is 6 minutes on every unit. Last week we produced 5,000 units of product A and actual factory cost, mostly the actual factory cost excludes material cost when we are calculating at the throughput, right? So 1,20,000 is the actual factory cost given. You need to calculate the throughput cost for the week. For calculating throughput cost, first I need to know what is the cost per minute, because on the basis of minutes the things are given. So 1,20,000 is the total factory cost for 48,000 minutes. So 1,20,000 divided by 48,000 will give you 2.5 as the cost on per minute basis. Okay? Now find out what is the minute taken for the actual units produced. 5,000 units are produced in 6 minutes per unit. So total 30,000 minutes are taken multiplied by 2.5 per minute will give you 75,000 as the cost. So throughput cost per week is 75,000 here. The following tasks are associated with activity based costing system. First is allocation of cost to products, identification of cost pool, identification of cost driver and calculation of pool rates. You need to write all these in a proper order. So what is the order here when you are following activity based costing? The first one is identification of cost driver. First find out what all cost drivers you have. Then identify what all cost pools are there. Then calculate the cost pool rate, which is nothing but your cost driver rate only. And then allocate the cost to product. Okay? So 3, 2, 4 and 1. 3, 2, 4, 1 is the correct option. Option number A. Okay? RRS, a manufacturer of large windows, is experiencing a bottleneck in its plant. Setup time at one of its workstation has been identified as the culprit. A manager has proposed a plan to reduce setup time at a cost of 7,20,000. The change will result in 800 additional windows. The selling price per window is 18,000. Direct labor costs are 3,000 per window and the cost of direct material is 7,000 per window. Assume all units produced can be sold. The change will result in an increase in throughput contribution of, you need to calculate the throughput contribution. So I already know the selling price which is 18,000 and the direct material cost which is 7,000. So this will give me a contribution of 11,000 on every unit. Multiplied by the total number of units which is 800 will give you 88 lakh rupees as the change in or increase in contribution, throughput contribution which is happening here. The Arm Limited operates a throughput accounting system. The details of the product D are as under. You need to calculate return per hour. So selling price minus material cost will give you the return which is throughput. 60 minus 24 is 36. And 10 minutes is required on every unit. So 3.6 per minute is the return per minute. You have to calculate return per hour. So just multiply this with 60. 3.6 into 60 will give you 216. Done. OABIS Limited operates an activity-based costing system to attribute its overhead to cost objects. And at this company, the cost of the personal department has always been charged to the production department on the number of employees, but you have to charge on the basis of number of new hires. And this question we have seen already. So we have total 30 new hires and the total cost incurred is 3 lakh. 3 lakh divided by 30 will give you 10,000 as the cost on every new hire. And you have to calculate for department BP. Department BP has 15 new hires multiplied by 10,000 per hire will give you 1,50,000. Okay? Producing more non-bottleneck output. Producing more non-bottleneck output is of no use to you. You should not do that, right? Because this will not help you in any way. Creates more inventory and increases throughput contribution. Answer is no. Non-bottleneck output is created, but as there is a bottleneck limiting factor, that will not be able to create that number of units which is created by the non-bottleneck. Hence, increase in throughput contribution will not happen. Definitely your inventory will get increased. Increase in inventory but not increase in throughput contribution is the correct answer. Creates less pressure for bottleneck workstation. Answer is no. It creates more pressure for the bottleneck workstation because non-bottleneck are creating higher number of units. Allows for maximization of overall contribution. You can't maximize the overall contribution if you are not able to produce a final product. You are only producing half of the product, hence this is not correct. The correct answer is create more inventory but does not increase the throughput contribution. Again, that number of new hire related question. So on the basis of number of new hire, you have to charge this cost. So total number of new hire is 50. 3 lakh divided by 50 will give you 6,000 as the cost per new hire. You have to calculate for department D. 32 hires are there. So 32 into 6,000 will give you 1,92,000. Setup time at one of its workstation has identified as the offender. So again a setup time related question, but here they want us to calculate the increase in throughput contribution. So what to do? Take your selling price which is 19,300 minus material cost which is 8,000 will give you 11,300 multiplied by number of doors which is 500. So 11,300 into 500 will give you 56,50,000 as your throughput contribution. Companies that would benefit from backflush costing include companies which have fast manufacturing lead time. This we have already seen. Next, which of the following is true about theory of constraint? Theory of constraint is your throughput related calculation only, where you have some constraint and on the basis of that constraint you need to find out what is how you can earn the maximum profit. Okay? Through theory of constraint recognizes that lower inventory means slower response to customer. Lower inventory means slower response to customer. Answer is no. In throughput accounting, we prefer keeping lower inventory because that is beneficial for you. You can get to know what all problems are there in the organization and you can improve your situation. So this is not correct. Throughput theory of constraints recognizes that lowering inventory decreases carrying cost and thus decreases operating expenses and improves the net income. That is the correct option. Why? Because if you lower the inventory, you will definitely lower the carrying cost. You will also reduce your operating expenses and that itself helps you to improve your net income. Theory of constraint recognizes that lower inventory means more defect. Answer is no. Lower inventory actually is a good thing for us. It does not mean more defects. It is a better situation. It actually leads to less obsolescence for the organization. Theory of constraint recognizes the EOQ is important. Answer is no. EOQ is used in the traditional systems. In throughput accounting, we don't use EOQ as such. Next is question number 18. The operational activity of setting up equipment is classified as. So setting up equipment is classified as what particular type of activity? So there are 4 different types of activities which we have. The first one is unit level activity. The activity, the cost of which is applicable for every unit is a unit level activity. Like the direct material which you use direct material is like a unit level activity which will be applicable for every product which we are producing. Facility level activity like the rent of the factory is applicable for your facility, for the factory in which you are. So whatever is the cost applicable for the factory as a whole is factory level or facility level activity, is covered under facility level activity. Batch level activity where the cost is applicable on every batches which you are producing or every batches you are selling. That is batch level activity. Then product level activity is the activity which is applicable on while you are designing the product. So let's say if I am designing this calculator, I am going to design this only once, not every time whenever I am producing each and every unit. That means that is a product level activity of designing the product because that happens for one product at once only. Okay? Now, so setting up equipment, this happens whenever you are producing one batch. You're going to set up the equipment again. Hence, this is a batch level activity. A factory has a key resource bottleneck of facility A, which is available for 31,300 minutes. The time taken per unit for X and Y, two different products are what we are making here. 5 minutes and 10 minutes are taken on one unit. And last week, these much units are produced. Actual factory cost is 78,250. So 78,250 divided by 31,300 will give you cost per minute. Actual factory cost divided by total minutes available. The cost per minute is 2.5. Now, the total minutes taken for your actual output is 4750 units multiplied by 5 minutes is equal to 23,750 minutes, and 650 units multiplied by 10 minutes is 6,500 minutes, plus 23750 will give you 30,250 minutes multiplied by 2.5 per minute will give you 75625 as your throughput cost for the week. Throughput cost is calculated on the actual units produced, hence we calculated the same. Which of the following is not correct? So production scheduling can be the cost driver of production scheduling can be number of production runs. Dispatching can be on the basis of number of dispatch orders, and goods received is on the basis of goods received order. But inspection is not based on machine hours. Inspection is based on inspection hours or the number of inspection you are doing. Hence, this is an incorrect match. Next, XYZ Limited has the following alternative plant activity levels. Total cost is given to you and the number of units produced is there. If the fixed overhead remains constant, then fixed overhead cost per unit at level E will be. So to calculate the fixed overhead, first I need to find out what is the variable cost here. So again, I'm going to take that change in cost upon change in units. So you can take off any level, but it is beneficial for you to take the high cost and low cost comparison. Okay? So change in cost is 1 lakh. Upon change in units is 515. 10,000 is the change in units. That means 10 per unit is your variable cost here. Okay? So if I want to calculate the fixed cost, I can just multiply the number of units with the variable cost per unit. This will give me the total variable cost here. So 5,000 into 10 is 50,000. Out of 1 lakh, 50,000 is variable cost. So the remaining 50,000 is fixed cost. Now you need to calculate fixed cost per unit for level E. For level E, we have 5,000 units. 50,000 is the fixed cost divided by 5,000 unit will give you 10 per unit as the fixed cost for level E. Okay? On a per unit basis. Now, a manufacturing company manufactures and sells packaging machine. It recently introduces activity-based costing to refine its existing system. Each package machine requires direct material cost of 50,000, 50 equipment parts, 12 machine hours, 15 assembly line hours, 4 inspection hours. The details about the cost pool allocation basis and allocation rate is already given to you. So, your 50 equipment parts will have 8 per part as the cost, 12 machine hours, 68 per machine hour is the cost, 15 assembly line, 75 per assembly line is the cost, and 4 inspection hour multiplied by 104 is the cost. This will give you the indirect cost applicable for packaging machine, for one packaging machine. But we are manufacturing 40 can packaging machine, and you need to calculate the indirect cost applicable for this 40 can packaging machine. Direct material is a direct cost. You need not take that direct cost. You only have to take the indirect cost here. So 8 into 50, this will give you 400. 68 into 12 is 816. 75 into 15 is equal to 1125. And 104 into 4 is equal to 416. So in total, 416 plus 1125 plus 816 plus 400 will give you 2757. This is the indirect cost for one machine. Multiplied by, we are making 40 machines. So the cost is 1,10,280. Okay. Next, Twin Limited uses just-in-time and backflush accounting. It does not use a raw material stock control account. During September 2018, 10,000 units were produced and sold. The standard cost per unit is 150, which includes material as 60. During September 2018, the actual conversion cost which we incurred is 9,90,000. The debit balance in cost of goods sold account for September 2018 was. Now you need to understand that if you are not making raw material stock control account, that means if you are taking the raw material to cost of goods sold account, you will take at standard only. Okay? So, what will be the entry for cost of goods sold? Cost of goods sold account debited to your, as we are not making raw material account, we are going to write to creditors and to conversion cost. In this conversion cost, you are going to consider the conversion cost on the basis of standard only. So, whenever we transfer our material and labor or overheads related cost to the cost of goods sold, we transfer at standard cost only. So material standard cost is 60 multiplied by 10,000 units are there. So this is equal to 6 lakh rupees. And conversion cost As per standard, the total cost is 150, out of which 60 is material. That means remaining 90 is your conversion cost. 90 into 10,000 will give you 9 lakh as the standard conversion cost, which we are going to charge to cost of goods sold. So in cost of goods sold, we are transferring 15 lakh rupees. But after that, whatever is the difference between your actual conversion cost and your conversion cost absorbed to cost of goods sold, we transfer that remaining part also in your cost of goods sold. Okay? So cost of goods sold account debited to your remaining part of conversion cost, which is 90,000, that will also get transferred to cost of goods sold. Hence, the total amount transferred to cost of goods sold is 15 lakh plus 90,000, that is equal to 15 lakh 90,000. Next, a company operates a standard absorption costing system. The budgeted fixed production overhead for the company for last year was 3 lakh 30,000 and the budgeted output was 2 lakh 20,000. Budgeted fixed production overhead is 3 lakh 30 and budgeted output is 2 lakh 20,000. At the end of the company's financial year, the total of the fixed production overhead debited to fixed production overhead control account was 2 lakh 60,000. So this is your actual fixed production overhead, which is 2 lakh 60,000 and the actual output is 2 lakh. You need to calculate what is the under or over absorption of overhead. For calculating under or over absorption of overhead, we have to calculate fixed overhead cost variance. So this is the question of standard costing covered in your chapter number 4. Okay? So what to do for calculating fixed overhead cost variance? You're going to take your standard cost for actual output minus actual cost. So actual cost I already know 2 lakh 60,000. Standard cost for actual output. I already know that the standard or the budgeted cost for budgeted output is 3 lakh 30,000 for 2 lakh 20,000. We want to calculate for actual output. So 3 lakh 30 is for 2 lakh 20,000 units. So what will be the cost for 2 lakh units? 3 lakh. 3 lakh is the cost minus 2 lakh 60,000 will give you 40,000 favorable. Now what does 40,000 favorable shows? That you absorbed 3 lakh rupees, but you have to absorb only the actual cost, which is 2 lakh 60. That means you absorbed higher absorption. That means over absorption has been done here. Okay. Next, the following information relate to activity based costing. We have 60 and 80% activity level for which variable and fixed cost is given. Fixed cost is also changing on the basis of activity level. You need to calculate the differential cost. Differential cost is the difference between the cost between these two different alternatives. Here 4,000 is the increase in cost, 2,000 is the increase in cost. So differential cost is, it doesn't matter whether it is a fixed or variable. If it is increasing between different situations, we are going to consider that as differential cost. Hence 4 plus 2, 6,000 is your differential cost. A company operates an activity based costing system to attribute its overhead cost to cost objects. In its budget for the year 31st August 2018, the company expected to place a total of 2,000 purchase order. This is our budgeted orders, 2,000, and budgeted cost is 1 lakh. The activity and its related costs were budgeted to occur at a constant rate throughout the budget year, which is divided into 13 4-week period. During the 4-week period ended 30th June 2017, a total of 200 purchase orders were placed. So, think about it. If 1 lakh is the cost for total 2,000 orders. If 1 lakh is the cost for 2,000 orders, that means 50 per order is the cost. And your ordering cost is going to be charged on the basis of number of orders only. So, 50 into 200, this is equal to 10,000 is the cost which we absorbed as per activity based costing. But the actual cost was 9,000 rupees. That means we over recovered. How much over recovery happened? 1,000 rupees is over recovered here. Okay? Next, a company uses traditional standard costing system. This is a question of standard costing plus ABC plus activity based costing. A company uses traditional standard costing system. The inspection and setup costs are actual fixed overhead is 1760, but budgeted fixed overhead is 2,000. Activity based costing system is being implemented, and accordingly the number of batches is identified as the cost driver for inspection and setup cost. So for charging your inspection and setup cost, we are using number of batches as the base. The budgeted production is 10,000 units in batches of 1,000 units. So as per budget, 10,000 units is to be produced and the batches will be having 1,000 units each. That means what is the total number of batches? Budgeted batches is 10. ठीक है. Whereas actually we produce 9,000 units and 11 batches are there. So actual number of batches is 11. The cost per batch under activity based costing system will be, now when they are asking cost per batch, it can be actual overhead divided by actual cost, actual batches, or budgeted overhead divided by budgeted batches. So what they want standard cost per batch or actual cost per batch. As they are not mentioning anything, you're going to use your standard cost per batch. ठीक है, 2000 divided by 10 batches will give you 200 as the cost per batch. ठीक है. Next, when you wait until the manufacture of a product has been completed and then record all related issuance of inventory from stock that were required to create the product, it is called backflash accounting. Why? Because you are recording everything at the end after everything has already been done. The following tasks are associated with activity-based costing system. You need to arrange this in a correct order. So the correct order is first identify the cost drivers, then identify the cost pool, then calculate the cost driver rate, and then allocate the cost to the product. So 3241. 3241 is the correct option. Backflash costing is most likely to be used when a just-in-time inventory philosophy has been adopted. So in case of just-in-time, we apply the backflash costing. And with this, we completed our chapter number 4 also. We can move forward to the next chapter, that is chapter number 5. Let's see what it says. Yan Limited adopting standard costing in its factory, budgets for fixed overhead of 50,000 and production of 10,000 units for the month of year 2025. Actual production was 9,500 units. So budgeted output is given to you as 10,000. Actual output is 9,500. Budgeted fixed overhead is 50,000. And the actual fixed overhead is 52,000. You need to calculate fixed overhead volume variance. For calculating fixed overhead volume variance, we take actual output minus budgeted output into standard rate per unit. For calculating standard rate per unit, take your budgeted fixed overhead divided by budgeted output. So 50 divided by 10,000 will give you 5 rupees. So 500 negative into 5 will give you 2,500 adverse. Okay? Next, standard cost and budgeted cost are. So in standard cost and budgeted cost are somewhat interrelated only. Similar kind of things are there, but they are not interdependent. You can use standard costing in your organization without using budgeted cost, and you can use budgeted cost without using standard cost. So they are interrelated, but they are not interdependent. In a factory where standard costing system is followed, the production department consumed 1100 kgs at 8 per kg. So this is your actual quantity consumed and actual price given to you as 8. For product X, resulting in material price variance of 2,200 is the material price variance. Favorable. How to calculate price variance? Actual price minus standard price into, first though we write the standard price, right? Standard price minus actual price into actual quantity is 2,200. Standard price we don't know. Actual price is 8 into 1100 is equal to 2000 favorable. That means 2,200 positive only. So standard price minus 8. If I take this 1100 there, this is going to be 2,200 divided by 1100 will give you 2. And standard price is 8 plus 2, which is equal to 10. Next, your material usage variance is given, with the help of which we can calculate standard quantity. Material usage variance is 1000 adverse. So standard quantity minus actual quantity, which is 1100, into standard price, which is 10, is equal to 1000 adverse, means 1000 negative. So standard quantity minus 1100. If I take this 10 there, this is going to be in divide and I'm getting minus 100. So standard quantity is equal to minus 100 plus 1100 will give you 1000. Okay. What to calculate in this question? You need to calculate standard material cost of actual production. So standard material cost is standard quantity multiplied by standard price. So 1000 into 10 will give you 10,000. Done. Next. The exact same question is there here also. So in June 25 and December 24, they asked the exact same question and the values are also same. Hence 10,000 is the correct answer here. Bonus Limited adopted a standard costing system, provides the following information pertaining to direct material. For the month of April 2024, we have standard price of 7.2, actual quantity of 3,200, standard quantity of 2,900 and material price variance is given to you as 960 favorable. So standard price minus actual price into actual quantity is equal to 960. And standard price is 7.2 minus actual price we don't know. Actual quantity is 3,200 is equal to 960. So 960 divided by 3,200 is 0.3. So 7.2 minus actual price is equal to 0.3. And if I take this 0.3 here and actual price there, I'm getting 6.9 as my actual purchase price per unit. ठीक है. Next, you need to calculate variable overhead expenditure variance, and the question provides us the normal production. Standard overhead rate are based on normal units. One standard direct labor hour per unit for the month of April is required. So, and with that they are also providing us the standard rate applicable for direct labor hour. We want for only for variable overhead, hence I'm going to take standard rate per hour of variable overhead. Then the actual hours, which is 14,000, and the standard hours. So 14,000 units are produced and 1 hour is required for every unit. So 14,000 is your standard hours also. You need to calculate variable overhead expenditure variance, which is what? Standard rate minus actual rate into actual hours. Okay? What is the actual rate applicable? 2,19,000 is the total cost, and out of which 87,000 is fixed. So 2,90,000 minus 87 will give you 2,03,000 as the variable cost applicable for 14,000 hours. 2,03,000 divided by 14,000 will give you 14.5 as your actual rate per hour. So 15 minus 14.5 into actual hours is 14,000. So 0.5 into 14,000 will give you 7,000 favorable, and this is your overhead expenditure variance. Okay? Next, a company producing output X and Y using standard costing, the standard overhead contents of each product is 3 per unit and 2.25 per unit is the standard overhead cost on a per unit basis. Budgeted overhead cost is given to you, budgeted time is there, then actual output is there, actual time is there, actual overhead is there. You need to calculate volume variance. How to calculate volume variance? We can use actual output minus budgeted output into standard rate. So actual output into standard rate minus budgeted output into standard rate is what you need to use. Budgeted output into standard rate is nothing but your budgeted fixed overhead, which is 860. Okay? What is the actual output produced? 200 units multiplied by 3 per unit is the standard rate, plus 100 units multiplied by 2.25 per unit is the standard rate. So 600 and 225. So total 825. 825 minus 860 will give you 35 adverse, and this is your answer. Okay, done. Moving forward to the next question. In a factory of Beewu Limited, standard costing system is followed. The production department allowed 1200 hours of standard hours for the actual production. So standard hours is 1200 and standard rate is 16 per labor hour, and actual production is 1000 units. Labor rate variance is given to you as 15,000 favorable. Actual rate is 14.5. You need to calculate the actual labor hours. With the help of rate variance, we can very easily calculate this. 16 minus 1.5, standard rate minus actual rate into actual hour is equal to 15,000. So 16 minus 14.5 is equal to 1.5. If I divide 1.5 with 15,000, I am getting 10,000 as the actual hours. Okay. Next is Bosan Limited using standard costing system provides the following information pertaining to direct labor. We have standard rate as 16, actual rate as 14.5, and labor rate variance is given to you as 15,000 favorable, and with that they are also providing us the standard hours of 8,000. You need to calculate actual labor hours worked. So for this, I'll take my standard rate, which is 16 minus actual rate of 14.5 into actual hours is equal to 15,000. Okay. So actual hours is what? Again, I'm getting the exact same value as I have got in the previous question. Even if the standard hours is different, actual output is different as compared to what was there in the previous question. But for calculating actual hours, I don't need standard hours and actual output. Hence, this is the correct answer. 10,000 hours is the correct answer here also. Now, the next question is material cost variance related. We are using 1 ton of material standard out for producing a standard output of 1 lakh units, and standard price is given on a per kg basis as 20 rupees. Actual quantity is used as 10 tons, but actual price is 21 per kg. Now, if you notice, the material is given on tons, but the rate is on per kg basis. We have to use the actual quantity also or the material also in the kgs. So, 10 tons into 1000 will give you 10,000. And what is the standard quantity for actual output? 1 lakh units. For producing 1 lakh units, as per standard, we require 1 ton of material. But if we are producing 9 lakh units, then 9 ton of material. 9 ton into 1000 kg is equal to 1 ton. So 9,000 kgs is what we are getting here. You need to calculate cost variance. So just multiply actual price into actual quantity, which is 2,10,000. And standard price into standard quantity is 1,80,000. Minus 2,10,000 will give you 30,000 adverse. Done. Next. A manufacturing company has the following information to a normal monthly production of 10,000 units and normal monthly volume of 1 standard direct labor per unit. So for producing 1 unit, you require 1 hour as per standard. This question, I think we have seen previously also. Standard factory overhead rate per direct labor hour is given to you as 6 and 10. You need to calculate variable overhead expenditure variance. So no need to focus on this fixed cost. Okay? 9,000 units is what we produced. Actual factory overhead is 156, out of which 70 is fixed. We want only the variable part. And variable is 86,000. Okay? So for calculating expenditure variance of variable overhead, we need standard rate minus actual rate into actual hours. So standard rate is 10 rupees per hour minus actual rate is what? 86,000 for 9,000 hours. 86,000 for 9,000 hours is equal to 9.555 into actual hours is 9,000. So 10 minus 9.555 into 9,000 will give you 4,000 favorable. Done. Next, the higher the actual hours worked, the lower the capacity usage ratio. Higher the capacity usage, lower the capacity utilization, higher the capacity utilization. So first you need to understand what is capacity usage ratio and capacity utilization ratio. Capacity usage ratio is when you are comparing your budgeted hours with the maximum possible hours available in the budget itself. So let's say in budget we have 10,000 hours, but out of this 10,000 hours, only as per budget itself, only 8,000 hours is what we can work for. Okay? So this is a comparison of budgeted hours with the maximum capacity available, and that is your capacity usage ratio. Capacity utilization ratio is your capacity variance which you calculate for fixed overhead. How you calculate? Actual hours minus budgeted hours. Similarly, we calculate capacity utilization ratio, actual hours divided by budgeted hours into 100. Okay? So actual hours is used for capacity utilization ratio only and not for capacity usage ratio. So if your actual hours is higher, your capacity utilization ratio is also going to be higher. Why? Because actual hours is written above or in the numerator and budgeted hours is in the denominator. So if this is higher, your total ratio is going to be higher. So the higher capacity utilization ratio is the correct answer. Next, Max Limited fixes the interdivisional transfer price. This is a question of chapter number 3 covered in this chapter. So let's see and cover this here. Okay? So we have interdivisional transfer price which we are using on the basis of cost plus a return on investment in the division. So the total assets which is used here, you are also going to cover the debtors separately as debtors is given separately. Okay? So what our institute assumes is if they are providing debtors separately, that means that is not included in current assets. Okay? You have to include that separately here, assuming that is not included in current assets. So 5 plus 3 plus 2, that is equal to total 10 lakh is the assets which we have. And we want a return of 28% of the 10 lakh, which is your investment. So 2,80,000 is the return which we want to earn. This is the profit which you want to earn. And the fixed cost of the division is 8 lakh rupees. And the variable cost is 10 rupees per unit multiplied by number of units. So 40 lakh rupees. Okay? If I add all of them, 2,80,000 plus 8 lakh plus 40 lakh, which is equal to 50,80,000 is the total transfer price which you are going to charge. And if I want to calculate on a per unit basis, divided by number of units. So this is equal to 12.7. Okay? Done. A manufacturing company uses 2 types of material X and Y. For manufacture of a standard product, the following information is given to you. So you need to calculate direct material mix variance here. For calculating direct material mix variance, we compare revised standard quantity with the actual quantity. What is revised standard quantity? For actual input. So whatever is your actual input, you're going to distribute this in the proportion of your standard. Standard itself is having the same exact input and distributed in the ratio of 120:80. So I can write my revised standard quantity also as 120:80. Okay? So what is your mix variance? Revised standard quantity minus actual quantity into standard price. Again, revised standard quantity minus actual quantity into standard price. Okay? So 8 into 5 will give you 40 favorable, minus 8 into 10 will give you 80 adverse. So in total we are getting 40 adverse as our mix variance. 40 adverse or 40 unfavorable is exactly same thing. Okay? Next, AB Limited uses standard costing system. The following information pertains to direct labor for product X for the month of 2019. So we have standard rate, actual rate, standard hours. Standard rate is 8 8.4. Standard hours for actual production is 2000. And labor efficiency variance is given to you as 1600 adverse. How to calculate labor efficiency variance? Standard hours minus actual hours into standard rate will give you efficiency variance of 600 adverse. Standard hours is 2000 minus actual hours, we don't know, we have to calculate that only, multiplied by standard rate is 8. 1600 adverse is 1600 negative. 2000 minus actual hours is equal to, if I take this 8 there, I'm getting 200 negative. So if I take this actual hour there and 200 here, I'm getting 2000 plus 200 is equal to actual hour. And your actual hours is 2200. Done. Next. Uniform costing may not be successfully applied in the following case. What is uniform costing? Applying the same type of costing principles for different industries or different divisions of the organization. We do that only when we have similar kind of products manufactured in that different areas. Okay? So when you're not going to apply that, when your products are different. In a single enterprise having a number of branches, each of which manufactures the same set of product with the same facility. Product is same facility is there, you can use uniform costing. In a number of industry in the same entities in the same industry, if they are there in the same industry, that means they are manufacturing the similar kind of product. Hence, you can apply uniform costing here. In the number of units across different geographical location, manufacturing one or more of a given set of product. So a similar set of product is manufactured by them. Hence, here also you can apply uniform costing. So uniform costing is not applicable when you have different products using a unique process for different products. Hence, you can't use uniform costing here. Okay. Next, in a factory where standard costing is followed, the production department consumed 1100. Now, this question is exactly similar as we have seen previously. Hence, answer will be 10,000. Okay. Next, the following figures are extracted from the books of a company. You need to calculate variable overhead cost variance and fixed overhead cost variance. Now, this is something important. We have budgeted overhead. First, I am calculating budgeted fixed overhead as 6,000 and budgeted variable overhead is 4,000. Then actual fixed overhead is 6,100 and budgeted actual variable overhead, right? Actual variable overhead is 4,300. Now, after this we have actual hours as 2,100 and budgeted hours as 2,000. Okay? For variable overhead, so we need only actual hours. Now they want us to calculate variable overhead cost variance and fixed overhead cost variance. How we calculate variable overhead cost variance and fixed overhead cost variance? For this, I need standard rate into standard hour minus actual rate into actual hours. Actual rate into actual hour is nothing but your actual cost. But standard rate into standard hour, for that you need to calculate the standard hours. For calculating standard hour, the question should provide the actual output or budgeted output with the help of which we can calculate that. But they are not providing us the actual or budgeted output. Hence, you will not be able to calculate the standard hour itself in this question. So what to do? Standard hour is for actual output. So we are going to assume that our standard hours is exactly equal to actual hours. Okay? As the question is not providing us any information for standard hours, plus we will not be able to calculate standard hours if you don't have the output related information. We are going to assume that standard hours is exactly equal to actual hours. And if that is the case, then first I'll calculate the standard rate. First, let's calculate for variable overhead cost variance. Okay? So for standard rate of variable overhead, you're going to take the budgeted hours, which is 2,000, divided by budgeted variable overhead, which is 4,000. So standard rate is 4,000 divided by 2,000. Multiplied by standard hours is not there. Hence, we are going to use the actual hours only. Minus actual rate into actual hours is your actual overhead, which is 4,300. Actual hours is 2,100, not 2,000. Now, so 2,100 into 2 will give you 4,200 minus 4,300 is equal to 100 adverse. Okay? Next, for fixed overhead cost variance, you are going to use standard rate into standard hour minus actual rate into actual hours. Actual rate into actual hours is the actual fixed overhead, which is 6,100. Standard rate for fixed overhead is budgeted hours 2,000 and 6,000 is the cost. So 6,000 divided by 2,000 will give you 3 as the standard rate, and standard hours is not there. Hence, we are going to use the actual hours, which is 2,100. So 6,300 minus 6,100 will give you 200 favorable, 100 adverse and 200 favorable is the correct answer. Option number C is the correct answer. Okay? Done. Next. In this question, they are providing us the standard price, which is 7.2, actual quantity, which is 1,600 of the material. Standard quantity for actual output is 1,450. and material price variance is given to you as 480 favorable. What is the price variance formula? Standard price minus actual price is not there, multiplied by actual quantity is equal to 480. So 480 divided by 1600 will give you 0.3, and 7.2 minus 0.3 is equal to actual price, and that is equal to 6.9. This is the actual price per unit which is asked in the question. And we are left with the last question. The preparation and use of standard cost, comparing it with actual and analyzing the variances is covered in standard costing. In the standard costing only we set the standard, compare it with actual and calculate the variances. And with this we completed this chapter also. Now to each and every chapter is going to be very small, we can complete it very fast. Let's start with chapter number 6, that is your linear programming chapter. If 5, 0 and 15, 0, 50, 14, 25, 50 and 13, 50 are the corner points of the feasible region of linear programming problem, you need to maximize this particular function. Now you need to understand that whenever we use LPP, your corner point is the only one which is going to give you the maximum or minimum value, whatever you want. In this question, we want maximum value. So what I'm going to do is, I'm going to put this x1 and x2 values in this equation to check where we are getting the maximum profit. Okay? So z is equal to 2 into x1. First I'm putting this point. 2 into 50 will give you 100 and 3 into 0 is 0. So we are getting 100 here. Second, if I put this, 2 into 50 is equal to 100 and 3 into 14 is equal to 42. So 142 is what we are getting. Then if I put this value, 2 into 25 is 50 and 3 into 50 is 150 is equal to 200. And if I put this value, z is equal to 2 into 13 is 26 plus 3 into 50 is 150. So 176 is what we are getting. So out of all of these, what is the maximum value? 200. Hence this is the maximum value of your objective function. Okay. So moving forward to the next question. The constraint in a linear programming model are included in objective function. In the objective function, we include the variables, not the constraint specifically. Cost, constraint in linear programming problem, it's not necessary that every time it is cost. It can be anything else also. Hence, we can say that constraints are the limiting factor, right? All the constraints which we have are the limiting factor in the objective function. Which of the following is a valid constraint for a linear programming problem? So, in linear programming problem, we have a linear constraint. Okay? It should not be non-linear. Non-linear means it should not have power more than 1. If you notice here the power is more than 1, hence this is not a linear programming constraint. Here also if you notice there is a multiplication or division of the variables. I am dividing 12x1 with 3x2. 4x1 with 3x2 is less than equal to 8x1. And if I take this 8, if you notice here I am dividing x1 with x2. Hence this is not a linear programming problem. Now if I move forward, this is also not a linear programming problem even if the power is 1. Why? Because it has a more than sign. It should either have more than equal to or less than equal to, then only we solve it using linear programming problem. Hence this is not also a kind of valid constraint. The valid constraint is only this one. 5x1 plus 2x2 is less than equal to 10. And with this we completed our chapter number 6 also. These are the only questions which has been asked from this chapter. And now we are moving forward to chapter number 7, that is transportation problem. The highest negative opportunity cost value. So in transportation problem, what is opportunity cost value? So first, what we do in transportation problem, first we find out the basic feasible solution by using any kind of method like northwest corner, Vogel's approximation method or your least cost method. After getting your basic feasible solution, we check whether our m plus n minus 1 is equal to number of allocations or not. If it is not equal, then you are going to use epsilon for making it equal. If it is equal, then it is non-degenerate basic feasible solution. You can directly move to optimization. In optimization, we first calculate U and V using our allocated cells and then we calculate the opportunity loss of unallocated cells. If the opportunity loss is 0 or positive, that means you reach the optimality. If the opportunity loss is negative, then you need to improve your solution. For improving the solution, we start with the highest negative opportunity cost value. So, the highest negative opportunity cost value in an unused cell is your unallocated cell of a transportation matrix is chosen to improve the current solution. Why we specifically use the highest negative opportunity cost value or not any other opportunity cost value? Because it represents maximum possible cost reduction per unit. It results in no violation of rim condition. It represents per unit cost improvement, either one of the above. So, you need to understand that highest negative opportunity cost value shows highest amount of cost reduction and that is why we use that particular quantity. it ensures no violation of rim condition. So no violation of rim condition should be there in transportation problem every time. Then only you can solve the transportation problem. Now what is rim condition? Your supply and demand should be equal. That is your rim condition. Okay? It represents per unit cost improvement. It represents per unit cost improvement, but all the negative opportunity cost value cell is showing us the per unit cost improvement. It's not anything specific in highest negative opportunity cost value. The specific thing here is, here we have maximum cost reduction as compared to any other negative opportunity cost value cell. Okay? In a transportation matrix, R1 are rows, Cj are columns. The second allocation under the northwest corner rule will be, so if I have this transportation matrix, think about it, huh? So here they are mentioning as the demand. No, here to we mention the supply, and then here there are demands. Let's say the cost is given as 20, 60, 40, 80 and 50, 30. So in northwest corner method, you start with the northwest cost, northwest corner, and here the first allocation will be done. After allocating here, either your column will be crossed completely or your row will be crossed completely on the basis of what is the supply and demand given to you. Okay? So let's assume if your column is crossed here, then you are going to move to the column number 2 and row number 1. Okay? Row 1, column 2. Or else if your column is crossed completely, you are going to move to the row number 2, column number 1. Okay? So either your R2 C1 will be there as the next cell, or your C2 R1 will be there. R1 C2 will be there as your second cell where you are going to do the allocation. So it can be R1 C2 or R2 C1. R2 C1 is not there, hence R1 C2 is the correct answer here. Okay? Exact same question is asked again, hence here also R1 C2 is the correct answer. And with this we are completed with chapter number 7 also. Now we can move forward to the next chapter, that is chapter number 8, assignment. In marking assignment, which of the following should be preferred? Which one of the following you will prefer while doing the assignment? Marking assignment. Marking assignment means your row and column operation which you perform. In your row or column operation, what you prefer? We prefer either our rows or column which have only 1 0. Okay? You are not going to only prefer row. You are not going to only prefer column which has single 0. You are never going to prefer a column having more than 0. You are going to prefer the row or column which has single 0. Hence, this is the correct answer. When a maximization assignment problem is converted to minimization problem. So we do this whenever the question is providing us the maximization problem, we first have to convert it to minimization. The resultant matrix is called, we call it as profit matrix, regret matrix, cost matrix or dummy matrix. So profit matrix is the maximization assignment problem which was given to you. After conversion it becomes regret matrix. Okay? Even if we call it as cost matrix also, loss matrix also, but the correct name of your maximization converted to minimization is the regret matrix. Okay? Chalo. Choose the most appropriate answer. Your assignment problem can be considered as a particular case of. Assignment is a case of transportation problem only. Okay? Assignment is a special case of transportation where your supply and demand is only one. Why? Because one job can be assigned to one worker and one worker can be assigned to one job. Hence, supply and demand is kept as one. And if you solve the transportation problem keeping supply and demand exactly one, you can solve it. You can get the exact same answer as you get in your assignment problem. Okay? Next, sequencing problem. Sequencing problem is what? Sequencing the job. Which job will be performed first, which job will be performed second. That we don't do in assignment problem. And queuing is the queue which our customers are creating. That also is not done in assignment problem. Assignment is a special case of transportation problem only. And with this, your chapter number 8 is also done. Now we are moving forward to the chapter number 9, game theory. For game theory, you need to calculate with the help of maximum minimax principle, what is the value of game. So whatever is the player given in your row is the maximizing player and he calculates maximin. The player which is given in the column is your minimizing player and will calculate minimax. Okay? So maximizing player calculates maximin, minimizing player calculates minimax. How to calculate maximin? First calculate the minimum and then take the maximum of it. So what is the minimum here? 10, 6 and 5. Then take the maximum which is 10. For calculating minimax, you're first going to take the maximum which is 13, 13, 10 and 30 and then calculate the minimum of it which is 10. So as your maximin and minimax is exactly equal, that becomes your value of the game here and that is equal to 10. Okay? Next, The payoff metrics of a game for firm A and B is given to you. You need to use maximum minimax principle to find out value of the game. So how to find out? This is a maximizing player, hence will calculate maximum. Minimizing player will calculate minimax. So for maximum, first find out the minimum, which is 12, 8 and 4. And out of this minimum, find out the maximum value. For minimax, first find out the maximum, which is 40, 15, 12 and 35, and then find out the minimum of this. As 12 and 12 is exactly same, hence that becomes our value of the game. Okay. Next, again we have payoff metrics and you need to use maximum minimax principle. So this is a maximizing player, will calculate maximum. Minimizing will calculate minimax. So maximum, first find out the minimum, which is -1, here also minimum, here also minimum. Then find out the maximum, which is 6. Again, here we are going to find out the maximum, and then the minimum. As the value is exactly same, that becomes our value of the game. Okay? Now this is related to your transportation problem, mistakenly covered in your game theory. Okay? When fewer than m plus n shipment exist in a feasible solution. So if your allocations which you have done under transportation problem is less than m plus n minus 1, that means it is a degenerate basic feasible solution. And if you get a degenerate basic feasible solution, you need to introduce an artificial variable to make a new allocated cell. So an occupied cell must be created artificially. That is what we do when our m plus n minus 1 is not equal to our allocations. Then again, value of the game is to be calculated, and the question is not mentioning what to use here. So first, I am going to use maximum, minimax only. So minimum, and maximum of it. Then maximum, and minimum of it. So 4 and 4, value of the game is 4. And with this, we are done with chapter number 9 also. Moving forward to the next chapter, that is chapter number 10. Children's park in a city with various signals and crossing in the simulated model of a city traffic. This is a type of, so if there is a city traffic and children parks is there, which is a simulated model of a city traffic, that means you are creating a physical model of simulation, and whenever we create this physical model, we call it as an analog simulation. The important steps required for simulation approach in solving a problem is you are going to test and validate the model, you are going to design the experiment, you are going to conduct the experiment, you are going to do all of the above. Okay? Next. The drive-up window of a fast food operation was being studied using simulation for a variety of operating characteristics. As part of the study, data was collected on order processing time as given in the table below. Using the first 2 digits of the random number, determine the processing time that would be used to simulate the 5th sample. So you need to simulate the 5th sample by using the first 2 digits of random number only. Okay? Because for processing, you are using first 2 digits only. You are not going to consider any other digit after that. Okay? So first I will calculate cumulative probability, which is 0.30, 0.75, 0.95 and 1. Then you are going to calculate the range, which is 0 to 29, then 30 to 74, then 75 to 94, then 95 to 99. As the first 2 digit of this 5th sample, 5th customer is 37, that means it is coming in this range, and 2 minutes is the processing time, and we are done. With this, we completed simulation also. These are the only questions asked in your previous attempts. Now moving forward to chapter number 11, that is your network analysis. A PERT network has 4 activities on its critical path. 4 activities are there, and the standard deviation of each activity on the critical path is 4 days. What will be the standard deviation of the critical path? Now remember that if we have, let's say, 4 activities A, B, C, D, all of them has a standard deviation of 4, 4, 4, 4. Can I add all these standard deviation to get the standard deviation of the critical path? Answer is no, never. You can't do directly. You can't directly add standard deviations. What to do then? You're going to take first the variance of it. What is variance? Standard deviation ka square is variance. So 4 ka square is 16, again 16, again 16, again 16. Take the total of this variance, which is 64. Now do the under root of it to get your standard deviation. So this will give you 8, and this is your correct answer. Okay? Optimistic and pessimistic time is given to you. You need to calculate the variance. So 16 minus 4 divided by 6 ka square. So 12 by 6 ka square is 4. Now, the normal duration and normal cost of a project of BOS are 12 and 400. Cost slope is given to you. If the crash cost of the activity is 560, what will be the crash duration of the activity? We need to calculate crash duration. How to calculate? So first, what is the formula for cost slope? How we calculate the cost slope? change in the cost or increase in the cost which is happening due to crashing. 560 is the crash cost, minus previously our cost was 400, minus change in the days. Earlier our days was 12. Due to crash, what is the days applicable? So this is what we need to calculate. What is the crash duration? And cost slope is already given to you as 80. So 80 into 12 is 960 minus 80 crash duration is equal to 560 minus 400 is 160. So 960 minus 160 is equal to 80 crash duration. So we are getting 800 divided by 80 will be your cash duration, that is equal to 10 days. Okay. Next, the expected time for an activity of project M. Expected time for an activity of project M is 20 days. If the most likely and pessimistic time are 19 and 28 days, what will be the variance of the activity? For calculating variance, we need pessimistic and optimistic time. So first I need to calculate optimistic time using these values given to you. So expected duration is equal to 1 into optimistic plus 4 into most likely plus 1 into pessimistic time divided by 6. Okay? Expected duration is given to you as 20. 1 into optimistic time I don't know. 4 into most likely time is 19 plus 1 into pessimistic time is 28 divided by 6. So 6 into 20 is 120 is equal to optimistic time plus 4 into 19 is 76 and 76 plus 28 is equal to 104. So 120 minus 104 will give you optimistic time as 16. After getting optimistic time, compare it with your pessimistic time. So 28 minus 16 divided by 6 ka square will give you variance. 28 minus 16 divided by 6 ka square is 4. 4 is your variance here. Okay. Next, expected time for an activity is 10 days. Optimistic and pessimistic is given. You need to calculate most likely. Again, I'm going to use this exact same formula. Your expected time is 10 is equal to optimistic time is 8. So 1 into 8 plus 4 into most likely is not known here. 1 into pessimistic is 12 divided by 6. So 6 into 10 is 60 is equal to 8 plus 12 is 20 plus 4 into most likely time. 60 minus 20 is 40 is equal to 4 into most likely time, and most likely time is equal to 10 days. Done. Next, slack time of tail event of activity Z of a project is 2 days. For tail event, slack time is 2 days. Total float and free float are 10 and 7. You need to calculate independent float. Independent float is free float minus slack of tail. Okay? So free float is 7 minus slack of tail is 2. So we are getting 5 days. The expected time for an activity of BS is 19. Optimistic and most likely is given. You need to calculate pessimistic. So your expected time is equal to 1 into optimistic time, which is equal to 15 only, and 4 into most likely time plus 1 into pessimistic time divided by 6. So 19 into 6 will give you 114 is equal to 4 into 18 plus 15 is equal to 87 plus pessimistic time. So 114 minus 87 will give you 27 as the pessimistic time. In PERT chart, the activity time distribution is normal distribution. The curve which you use under PERT is normal distribution curve only. Okay? Next, a PERT network has only 2 activities on its critical path. The standard deviation of these 2 activities are 6 and 8. I can't add the standard deviation directly to get the standard deviation of critical path. What I need to do, 6 ka square plus 8 ka square. 6 square is 36 plus 8 ka square is 64. To total we are getting 100. This is variance. Take the under root of it. This will give you 10 as the variance standard deviation for the project. The following will be the appropriate action to finish a project early. So whenever you want to finish the project early, you need to focus on the critical path. Okay? You are not going to focus on the critical path, non-critical path. Okay? Crash activity will not be of non-critical path. We are not going to crash the non-critical path. We are going to crash the critical path so that they become non-critical. Answer is no. Whenever we do the crashing of critical path, they don't become non-critical. They remain critical only. Okay? So this is also wrong. Crash activity on the critical path such that the critical path remains critical only. Okay? This is the correct answer. Next, in a PERT network, the optimistic time is 9, pessimistic is 21. You need to find out the best estimate of standard deviation of the activity. So for this particular activity, you need to calculate standard deviation. So when I take pessimistic minus optimistic divided by 6 ka square, this is variance. Okay? But if you remove this square, you're going to get the standard deviation only. 21 minus 9 divided by 6 is equal to 2 is your standard deviation here. Okay? Now, this is an interesting question. For understanding this question, you need to understand what is total float, free float and independent float. Total float is, I'm calculating a float for a particular activity, that is what is the extra time available for that particular activity. But while calculating this, I'm going to take the extra time of my succeeding activities also and my preceding activities also. So if I take all the extra time which is available with my succeeding and preceding activities, then what is the total extra time available with me? That is what total float is all about. Taking the succeeding and preceding activities time. Then what is free float? Free float is you can take the time of your previous activities, but you can't take the time of your succeeding activities. Okay? Whatever extra time is available with the preceding activity, I'm going to take that plus my extra time period available with me. I'm going to take that also. That is what free float is. So in free float, we don't take the succeeding activity time. In independent float, you do not take the succeeding or preceding activities extra time. You only take the extra time which is available with you. Okay? That is what independent float is all about. Now what the question wants, the portion of the float of an activity which cannot be consumed without affecting adversely the float of the subsequent activity. So you're calculating the float, but you are impacting the succeeding activity. The succeeding activity is not impacted in free float. It is not impacted in independent float. In total float, we impact succeeding and preceding both. So out of all of them, there is none of the float is there which is going to impact only and only succeeding activity. Hence, there is another float, that is interfering float. Interfering float is the float which is going to impact only and only the succeeding or the subsequent activities. Okay? So this is an interesting thing which we do not cover for the practical part, but for your theory they can ask this, and they have asked this in the previous attempts. In critical path analysis, which one of the following is not a correct step in sequence? In sequence, it should be correct. So first is understanding the logic of the system under consideration, then construct the network diagram, provide estimate for activity duration, and then implement and control the network diagram. So answer is no, there is one more step in between, and that step is, should be satisfying the objective. Whatever is the objective of yours, that objective should be satisfied first, and then you implement and control the network. So here there is one more step which was not covered, hence this is not in the correct sequence. The last option is not in correct sequence. Which one of the following is correct in the context of network analysis? There can be one or more activities without a predecessor in the network. This is the correct. There can be one or more activity where there is no predecessor of them. A or B has no preceding activities. It can happen. So this is the correct one. Now if I see the other options where two activities have the same start and end events, the end event of one activity is numbered differently. Answer is no, we don't do that. When crashing is carried out, the non-critical paths have to remain non-critical. Answer is no. After crashing, some non-critical path can become critical. If the critical path is longer than other path, the project may be completed by using a path having shorter duration. Answer is no. You can't complete by using a path which is having shorter duration. You need to complete all the paths related activity. Hence, critical path is the only duration which you can complete the project on. Okay? With this, we completed chapter number 11 also. We can move forward to chapter number 12. So, learning curve. An operation of Con Limited has a learning curve of 90% and the first unit produced took 30 minutes. The labor cost is 120 per hour. How much should the second unit labor cost should be? So, if learning curve is 90%, what is the average time per unit? Here we have 30. If I want to calculate for 2 units average time per unit, then 30 into 90% will give you 27 is the average time. If I want to calculate the total time for 2 units, 2 into 27 will give you 54 and the total time for 1 unit is 30. That means for the second unit specifically, what is the extra time which you have taken? 54 for all the 2 units. For first unit, 30. Hence, for the second unit, we have taken 24 minutes. Okay? Now, 120 per hour is the rate applicable. If this is minutes, I have to first convert it into hours by dividing it by 60 and multiplied by 120 per hour. This is the cost which will be there. 24 divided by 60 into 120 will give you 48 as the cost. Okay. When 24 hours is required to produce condenser of a particular type, then the time required to produce 16th unit with 85% learning curve. They want us to calculate specifically for 16th unit, but we won't be able to calculate the 16th unit time if they are not providing us x to the power b value or log related values. ठीक है? So if the question is not providing you log related values and they want for 16th, 8th, specifically 8th unit, specifically 7th unit, you'll not be able to calculate it. So what to do? I'll take average time per unit for the 16th unit. How to calculate this? 1, 2, 4, 8 and 16. Whenever units double, your hours is going to get reduced on average time. 24 is for the first unit, multiplied by 85% will give you 20.4, multiplied by 85% will give you 17.34, multiplied by 85% is 14.739, multiplied by 85% is equal to 12.52815. So can I say that if average time is somewhat 12.52, so your actual time for 16th unit specifically will be between 12 and 14 hours. Okay, next. Lonax Limited, a manufacturing company, has developed a new product and just completed the manufacture of first 16 units of the product. If the first unit took 6 hours and the first 16 units took 62.9856 hours, the learning curve rate will be, now this is an interesting question, you need to calculate learning curve rate. For this I need to use y is equal to ax to the power b related formula. Okay? So whenever they are asking us to calculate learning rate, this is the formula which you should use. Even if the quantity is coming by doubling the units, it doesn't matter. So first I need average time per unit for 16 units. So total time for 16 units together is 62.9856 divided by 16 will give you average time, which is 3.9366. A is your first unit time, which is 6, multiplied by x is 16 units to the power b. Okay? So 3.9366 divided by 6 will give you 0.6561 is equal to 16 to the power b. Now, what is b? B is log of learning rate divided by log 2. If I take this log 2 on this side, then b log 2 is what we are getting is equal to log r. Now we already know that whenever we calculate the log value, if log 2 to the power b is written, can I write it as b log 2? So if b log 2 is written, can I write it back as log 2 to the power b? And that is what we are going to do here. Log 2 to the power b is what I am writing is equal to log r. Now if you notice, here also we have log, here also we have log. We can cross the logs and we are left with 2 to the power b is equal to r. Okay? So wherever you find out 2 to the power b, you can place it equal to r. And this you need to remember, because every time no need to show this. You should remember that 2 to the power b is equal to r. Now, if 0.6561 is equal to 16 to the power b, then 0.6561 is equal to 16 can be written as 2 to the power 4. So 2 to the power 4 and b though we already have in power. So what I am going to do is 0.6561. In place of 2 to the power b, I am writing r, but 4 in the power will remain as it is. So what I am getting, 4 under root of 0.6561 is equal to r. So how to do under root 4 under root? Just press the under root 2 times. 1, 2, and this will give you 90%, and 90% is the learning rate applicable. Okay? Next. In the next question, they are mentioning that Doxt Limited, a manufacturing company, is preparing a quotation for new product D. The time taken for the first unit is 30 hours. 30 hours is the time for the first unit. The company expects 85% learning curve. Index is minus 0.2345. Index is what? Your B value. The company desires that the quotation should be based on the time taken for the final output within the learning period, which is expected to end after the company has produced 200 units. So what we want to take as the time period for every unit? The time period which is taken for the 200th unit. Okay? Specifically for final output, which is the 200th unit. For that, whatever is the time period, that is the time period which we want to quote on a per unit basis. So how to calculate for 200th unit specifically, what is the time period? For calculating this, I should know what is the total time taken for 200 units and what is the total time taken for 199 units. So time for 200 units minus time for 199 units will give you the time period specifically for 200th unit. So let's calculate that. For this, I need to use y is equal to ax to the power b. First, I am calculating the average time for 200 units. So A is the time period for the first unit, which is 30, multiplied by 200 to the power minus 0.2345 is equal to 300 into, this is given as 0.28867. 300 into 0.28867 is equal to 8.6601. Now this is the average time per unit for 200 units. We want to calculate total time, which is equal to 1732.02. Just multiply this with 200. Okay? Now similarly calculate for 199 units. So y is equal to 30 into 199 to the power minus 0.2345 is 0.28901, which is equal to 8.6703. This is the average time per unit for 199 units. I want the total time, so just multiply 199 here. We are getting 1725.3897 minus 1732.02. The time for your 200th unit is 6.63 hours. Okay, done. Bomb Limited has developed a new product and just completed the manufacture of first 4 units of the product. First unit took 4 hours and the first 4 units together took 11.56 hours. You need to again calculate the learning rate. So this is similar to the previous question which we have seen. Y is equal to ax to the power b is what we use. Y is the average time per unit for total 4 units. So 11.56 is the total time for 4 units. Divided by 4 will give you average time. First unit time is 4 and we are calculating for 4 units to the power b. Okay? 2.89 divided by 4 will give you 0.7225, and we already know that 2 to the power b is r. 4 to the power b can be written as 2 to the power 2b. Huh? Now 0.7225 in place of 2 to the power b I am writing r, and square will remain as it is. So if you take under root of 0.7225 you will get the value of r, and that is equal to 85%. Okay? Next, an employee of Rob Limited took 200 minutes to complete the first set of a new machine using a 90% incremental unit time learning model. Indicates that second setup time on the new machine is expected to be. You need to calculate for the second one. Okay? Up to second we can very easily calculate, but if they are not providing you the log related calculation or x to the power b related values, you will not be able to calculate for other units, specifically for 8th unit, for let's say 16th unit specifically what is the cost. Hence what we do is we calculate the average time there, but here for second we can calculate very easily. So calculate first, second. For the first unit we are taking 200 minutes. So for the second, 90% is the rate applicable, so 200 into 90% will give you 180. This is the average time per unit multiplied by number of units will give you 360 as the time. For the first unit 200 is the time, so 160 minutes is the time taken for the second unit. Next, Sox Limited manufactures a product Z whose time for the first unit is 80 hours. If it experiences a learning curve of 80%, what will be the time taken for the 8th unit? Now they want us to calculate specifically for 8th unit, but they are not providing us log related values, or they are not providing us the x to the power b value, and specifically 8th can't be calculated with the help of table. Hana? So what to do? Calculate with the help of table your average time. Your average time is what this question wants us specifically. Okay? So I will calculate by using the table only. 1248. 80 hours is the time period for the first unit. 80% of this is 64. 64 ka 80% is 51.2. Ka 80% is 40.96. So 40.96 is what we have to calculate here. Okay? Next. Sixth Limited has developed a new product and just completed the manufacture of the first 4 units. The first unit took 3 hours and the first 4 units together took 8.3667. You need to calculate learning curve ratio. So first though I need to calculate 8.3667 is for 4 units. So average time per unit is 2.091675. This is the average time per unit for 4 units, which is y is equal to a is your 3 hours multiplied by x is 4 units to the power b. So 2.091675 divided by 3 will give you 0.697225, and this 4 to the power b can be written as 2 to the power 2b, and 0.697225 is equal to 2 to the power b is r ka square. If I do under root of this, we are getting 0.835. 83.35% is the correct answer. A learning curve is a function where cost increases as productivity increases. Cost increases? Answer is no. Cost is going to decrease when productivity increases. That increases at a greater rate as workers become more familiar with the task. Learning curve is not going to increase at a greater rate. It is going to reduce. After every repetition which you do, your learning gets reduced. Okay? You're not going to learn more when you become familiar with the task. Learning curve is a function of linear. Answer is no, it is non-linear. that measures the decline in labor hours per unit due to workers becoming better at job. This is what we do under learning ka. We measure the decline in labor hours per unit if we are becoming better at job. To complete the first setup on a new machine took an employee 200 minutes. 80% is the learning rate. Second setup will take 200 minutes for the first one. For second, 80% is the learning rate. 200 into 80% is 160. 160 into 2 is 320. 200. So 120 is the extra time taken for the second unit. X is a factory making a certain product where learning curve ratio is 80% and 90% apply respectively for two equally paid workers A and B. So equally paid workers are there and learning curve ratio is 80 and 90%. Labor cost for manufacturing of fourth product will be more for A, more for B, will be same. Nothing can be said about the specific product. So whenever the learning rate is lower, there the learning happens at a faster pace. Okay? So if learning rate is 80% for A, that means A is going to take lesser cost for the fourth unit as compared to that of B. So the labor cost of B is going to be higher because B's learning rate is higher. Okay? Now S Limited recently sold an order of 50 units having the following cost. So direct material, direct labor, variable overhead. Variable overhead is on the basis of labor hours and fixed overhead is on the basis of 10% of variable cost. So if you take the total of all the variable costs, it is 40,000 and 10% of it is 1400. Okay? The company has now requested to prepare a bid for 150 units of the same product. First the question comes whether we should take fixed overhead or not. As fixed overhead is absorbed on 10% of variable cost, that means absorption costing is followed here. If they are following absorption costing and there is no as such idle capacity, spare capacity is given to you, hence you are going to charge the fixed overhead in the next order also if 80% learning rate is applicable. So if you notice, we don't know the time period for the first unit. We know the time period applicable for 50 units together and that is 1000 hours. So what I am going to do is 50 units is equal to one batch. Okay? Assume 50 units is equal to one batch. Whenever I double the batch, my learning rate is going to apply. So 2 batch means 100 units and 4 batch means 200 units. So cumulatively, this is cumulative production, right? Whenever we take it in the table, we take the cumulative production. Cumulatively 50 plus 150, we are producing 200 units. So for 200 units, what is the cost or the hours we can calculate and reduce it from the 50 units related hours. And that is how we will be able to get the 150 units related hours. Okay? So for 50 units, we are taking 1000 hours multiplied by 80%. 800 hours multiplied by 80%, 640 hours. 640 hours is for 4 batches together. That means for total hours taken for 4 batches is 2560. But we have to reduce the first 50 units hours, which is 1000. So 1560 is the hours taken for producing this 150 units. Now to just multiply the cost, direct material is 1500 for 50 units. So what will be the direct material cost for 150 units? 1500 divided by 15 to 150 will give you 4500. Direct labor is 8.5 multiplied by 1560 hours. This is equal to 13,260. Then variable overhead is 4 rupees multiplied by number of hours is 1560 will give you 6240. So the total variable cost is 24,000. 10% of this is going to be your fixed cost. So 2,400 is fixed cost. So total we are getting 26,400 as the cost applicable here. Okay, done. Now moving forward to the next question, and we are left with only 3 questions here. S Limited manufactures a product whose time for the first unit is 1000 hours. For the first unit we are taking 1000 hours. It experiences a learning rate of 80%. What will be the total time taken in hours for 5 to 8 units? For 5 to 8 units you need to calculate total time. Now for calculating this, first I have to calculate the total time for 4 units and total time for 8 units together. 8 minus 4 will give you the time period for 5 to 8 units. Okay? So for the first unit we have 1000 hours. Second is going to be 800 as per 80% learning curve. For 4 units together, average time per unit will be 640 and for 8 units 512. So 8 into 512 is equal to 4096. 640 into 4 is 2560. 2560 minus 4096 will give you the time period for 5 to 8 units, which is 1536. Done. An operation has 90% learning curve and the first unit took 28 minutes. The labor cost is 20 hours. Second unit cost will be, so 28 minutes for the first unit. For second 28 into 90%, that is equal to 25.2. This is the average time per unit. Multiplied by number of unit will give you 50.4, and this is 28. Difference between them is the second unit's time, which is 22.4. But the rate is on hourly basis, so divided by 60 to convert it into hours, multiplied by the rate. So 22.4 divided by 60 into 20 will give you 7.467. So 467 is not there, 7.6 is there, and that is what we are going to tick here. Okay? Now, for a learning curve percentage of 72, if the time taken for the fourth unit of a 12, the time taken to complete the fourth unit of a 12 unit job involved in the assembly line, if the initial unit requires 80 hours, so you need to calculate the time for the fourth unit specifically. Can I calculate fourth unit specifically? No, without having x to the power b value or log values will not be able to calculate. Hence, you have to calculate the average time only. Okay? So 1, 2 ka 4. Here we have 80. 80 ka 72% is 57.6. Ka 72% is 41.472. Hence, this is your correct answer. And with this, we completed our all questions related to learning curve, and now we can move forward to the next chapter, that is chapter number 13. Business applications of maxima and minima. The cost function of TNZPIC is given by C is equal to x cube minus 4x square plus 7x in terms of output x. So x is your units produced. Assess at what level of output the average cost is minimum. Average cost should be minimum. So first I need to calculate average cost. What is average cost? Total cost divided by number of units will give you average cost. So if I divide x cube by x, I'm going to get x square. If I divide 4x square by x, I'm going to get 4x. If I divide 7x by x, I'm going to get 7. So this is your average cost. So first what we do, we follow a necessary condition. Whenever you need to calculate maximum and minimum, you first follow a necessary condition that your first order derivative should be equal to 0. So first calculate first order derivative, which is 2x minus 4. This 7 is a constant number, hence will become 0. Okay? So first order derivative, keep it equal to 0. 2x is equal to 4, x is equal to 2 is what we are getting as the value. Now apply your second order derivative condition, which is d square y by dx square of average cost. If you want the average cost to be minimum, your second order derivative should be more than 0. So if I do 2x minus 4, second order derivative of this, I am getting 2 only. Hence this is more than 0. Hence you reached your minimum situation at x is equal to 2. So output should be 2 if you want your average cost to be minimum. Next, average cost for the function is given to you and marginal cost is given to you as 23. You need to find out the output. Now this is something interesting, an important question. Now from average cost, there is no relation with marginal cost. What to do? First, you need to convert your average cost to total cost, and then if you calculate the first order derivative of your total cost, that is exactly equal to marginal cost. So how to calculate from average cost, how to reach total cost? Average cost is a per unit cost. Just multiply the number of units with it, you'll get your total cost. So total cost is multiplied by x. So 1 by 3 x square will become x cube plus x into x will become x square, 8 into x will become 8x. And if I do first order derivative of my total cost, this is equal to marginal cost. So x cube will become 3x square upon 3 plus x square will become 2x plus 8x will be equal to 8. So 3 and 3 is crossed. We have a we can also put the marginal cost value here as 23 is equal to x square plus 2x plus 8. Now 0 is equal to x square plus 2x. If I take this 23 there, minus 23 plus 8 will give you 15, minus 15. Okay? Now, you have to multiply the values which are there in the constant number and with x square. So x square is not having anything, that means it has 1. So 15 into 1 will give you 15. Now you have to get that 15 in your middle value. If I multiply two numbers, I should get 15, and if I reduce or add two numbers, I should get 2. How to get that? 0 is equal to x square. Think about it. If I multiply 3 5s are 15, 5 3s is 15, and 5 minus 3 will give you 2 also. So 5 minus 3 can be written in place of 2, x minus 15. 0 is equal to x square plus 5x minus 3x minus 15. 0 is equal to, in these two values I can take x as common, and in these two values I can take minus 3 as common. So we are getting x minus 3 and x plus 5 is equal to 0. So either your x should be equal to 3 or your x should be equal to minus 5. X is output. Output cannot be negative. Hence, we are getting X as equal to 3. This is your answer. Okay? Again, we have similar kind of question, but here the question is directly providing you the total revenue. And if you do the first order derivative of total revenue, you can get your marginal revenue. So, first order derivative of total revenue. 1 by 3x cube will become 3x square upon 3. Minus x square will become minus 2x. Plus 10x will become plus 10. And a constant number will become 0 here. Okay? So, this and this can be crossed. And this is your marginal cost, marginal revenue only. So, just put the 25 here. X square minus 2x plus 10 is what we are getting. 0 is equal to x square minus 2x. If I take this 25 there, it will become minus 25. So, minus 25 plus 10 will give you minus 50. Okay? So, 0 is equal to x square minus, we have to get two values here. So, I am getting again 5 minus 3 because that gives us 2. And 5 into 3 will give you 15 also. X minus 15. So, 0 is equal to x square minus 5x plus 3x minus 15. So, 0 is equal to x minus 5 is taken common from here, and plus 3, x minus 5 is taken common here. So, x plus 3 and x minus 5 is what we are getting. With this, I can get x is equal to 5 and x is equal to minus 3. X cannot be negative, hence x is equal to 5 is the correct answer. And with this, we completed our chapter number 13 also, that is business application of maxima and minima. Now, we are moving forward to business forecasting models. In simple exponential smoothing forecast, to give higher weightage to recent demand information, the smoothing constant must be close to, if you want to give the higher weightage to your recent information, then you need to use 1. Smoothing coefficient should be closer to 1. Then only your recent demand information will get higher weightage. Which of the following is not a part of qualitative? Qualitative means here you are not using the numbers. But in exponential smoothing, so we use the number. Hence, this is not a part of qualitative type of forecasting technique. Others are qualitative techniques only. And with this, chapter number 14 is also completed. We can move forward to chapter number 15. Introduction to tools of data analytics. Now, here you need to know what all other tools can do under data analytics. And that is why this is somewhat complicated. I'll suggest you for this particular chapter, you should definitely refer the study material questions also, so that at least all the questions which are covered in MCQs, you are ready for that. Okay? Which of the following is or are features of Zoho Analytics tool? So for Zoho Analytics, BI and analytical platform and deployable in the cloud as well as on-premise server. Both are correct. Hence, both A and B of the above should be selected. Which of the following is related to financial data analytics? In financial data analytics, we calculate value driver, financial ratio and predictive sales, all of them. Hence, all of the above is the correct answer. Python can be used on different types of platform. Hence, it is a feature of platform independent. Which one of the following is not a spreadsheet? In spreadsheet, we have Quip, MS Excel and Google Sheet. E-views is not there. Which type of programming language use hashtag script ends? So let me tell you, these are the softwares, not the programming language. Only these two, Python and R programming, are the programming language, out of which for Python, we use this script ends, hashtag script ends. Which of the following is or are not the feature of Zidox tool? So for Zidox tool, B and C, both are not the features of Zidox tools, BI and analytical platform, and allow users to create and share powerful reports within minutes. Now, analysis of data set has revealed that the fact that profit of a business has reduced for the financial year 2022-23. What category of data analytics it is? We have just evaluated what has been done in the past, and that is descriptive analytics. What is predictive? Predicting the future, what is going to happen in the future. Diagnostic is finding out why whatever happened in the past, why that particular thing happened. And what is prescriptive? Whatever is going to happen in the future, according to that, what can I do the best? That is prescriptive analytics. Which one of the following has no relation with the business intelligence tool? Your ABS glue is a tool for the purpose of business intelligence. This is not a tool for business intelligence. For business intelligence, business analytical solution should retrieve, analyze and transform data. This is required. Visualization tools are used in business intelligence, and embedded analytics is used in business intelligence. But ABS glue, there is no as such tool applicable for business intelligence. Which of the following is or are the financial analytical tool? So all of these are financial analytical tool. Hence, all of the above is what you need to select. And with this, we completed all the questions related to your MCQs from the previous attempt. I hope you get the clarity. and after completing this, you will definitely be able to attempt the questions which are asked in the MCQs by the institute. I understand that all the MCQs are not going to be exactly same, but most of the questions are going to be similar to what has been asked in the previous attempts. Hence, this is an important video for you. Plus with that, all the MCQs which we have discussed today, I'm going to share that in our Telegram channel at CMA Junction. So make sure you're joining that. All the very best everyone. Make sure you're using the time really well, and let's meet in our next class. Till then, happy learning. Radhe Radhe. Bye-bye everyone.